is about to collapse. The big analyst on JP Morgan telling you that you got to sell your stock, and now I can buy it from you at a cheaper price.
On the trading floor amongst your team, the few star players that would always perform or would always be calm or would always pull out good returns, what did you see in them that was different, that led them to have that success?
You definitely...
Ladies and gents, welcome back to another episode. I've got a stock star with me. Michael, thank you very much for flying in to be with us today.
For sure. Thanks for having me, buddy.
So I want to explore, because I haven't had too many stock traders, and more importantly, just shedding a light on the stock industry, because the equities market, price action, the laws of trading are going to be the same.
Yeah.
But the industry is evolving. You're part of that evolution. But before we get into all things prop and the space in general, and also because I was recently in the stock exchange in New York, I'm sure we have a lot of things to explore together. But before, I want to get a basis on your trading strategy, especially because you were managing prop firm teams and you've been involved in the traditional prop space. Yeah. I want to explore with you strategies, first of all. What is your trading beliefs? How do you trade? And then we can go from there.
Yeah, for sure. So, when I started 17 years ago, I came from a background of gaming, right? I used to play a lot of Counter-Strike. And then I moved to trading. My ex-girlfriend bought me the Robert Kiyosaki book, Rich Dad, Poor Dad. And I introduced to the stock market. So it made sense to me to start trading in general, because you stay on the keyboard, making a decision in real time and all of that. Obviously, it took me quite some time to develop to the stage that I'm at right now, right? It started when I tried a little bit of demo account, then opened a new account with $10,000. A lot of testing back and forth, looking for the right solution. And when you start trading, you don't really know what you're doing, right? You learn from YouTube or other channels or whatnot. But at the end of the day, you're making a decision. You made a profit or a loss. You don't really know if it's the right call or just a luck. So it took me a lot of time just to craft it and understand if I'm doing right or it's a luck, right? So that's the first experience that I had. And
was your personal strategy that you were using different to the strategies used on the prop firm?
Yeah, most definitely.
Okay.
I mean, in the local prop firm, when I traded, I was the head of the traders there. We had 70 traders, and we traded together every day, right? But that was, I guess, 6 years ago, roughly. So I was already a seasoned trader. I already knew what I'm doing. And back then, we mostly traded reversals. We just buying the dip or ICT it or SMC, whatever, all of those nice and fancy words. At the end of the day, we looked for dips and bought the market mostly.
Would you say there is an advantage in trading the stock market or equities? Because unlike Forex, which is a ranging market, here you have generally a trending and appreciating market, therefore a built-in bias potentially. Does that make it easier, or is it not as simple?
I mean, for me, it makes sense. More sense than trading Forex, for example, because it's not a rangy market. You can play the trend. If you buy in the dip, you can hold it for a longer time because you understand that if that's the right move, that's the right trend, then you don't need to close your trade super fast because it's not a rangy thing. It could go easily a few days to the upside, right? So it just makes sense more to me than trading a rangy market.
And with that overall trend in mind, are you more focused on higher timeframes, or will you go down to the lower time frame for entries?
So when I started to trade, I definitely traded a 1 minute chart. I love the fast pace, being on the keyboard, making the fast decision in real time. And I always look for those nuances, because when I try to trade like 15 minutes or even a 5 minute chart, it's always felt like I'm missing something, because on a 1 minute chart, you can easily see the nuances, like the volume increasing dramatically, a pool of orders coming in, something that in most cases you won't see on a 5 minute chart. And also just the momentum between the buyers and the sellers. So you see the chart increasing or decreasing, and the pace, right? You look at the pace and the momentum is shifting. And then when you see that, you can understand more about the trend or the reaction that you're supposed to see.
Are you referring to momentum in just price action alone, or momentum with the order flow as well?
Yeah, basically when I started, it was definitely without the order flow. So just looking at the price action and see how fast the chart goes from 0 to 2, right? So that's the main thing. And besides that, obviously using supply and demands area and using MACD diversions in order to understand that this is the right call, or from here we're supposed to see a reversal.
Mm-hmm. And you mentioned you previously did the M1 and the fast pace, but it seems like you weren't doing that later on with the prop firm. What was that transition, and why did you have to change your strategy?
I mean, as long as I was with a local prop firm, I did the same thing. Nowadays, I'm doing less than that and more of a higher time frame, just because I'm busy. But as a trader, like a full-time trader, this is definitely my the place for me was a 1 minute chart.
Okay.
Yeah.
And
Still love it.
would you consider yourself an intraday or scalper? Or?
Yeah, 100%. I was a scalper at the beginning, going in very fast and taking just a 10 cents, 20 cents move. Eventually, I moved, because when you're trading, you shift through a whole lot of you go through a path, right? You start somewhere, then a few months later you go to a different strategy, or your personality changed and life changed and all of that. So when I started to trade with that prop firm, I actually did a 1 minute chart, but holding much longer. I started holding like 18 minutes, average on 18 minutes for a position. Then it went to an hour and a half, and even 4 hours, almost the entire day, like on average. So,
but in the end, it's still very short focused. Like,
yeah, for sure.
Yeah, definitely just scalping. Why did you choose the belief of lower time frame entries and short term trade scalping, as opposed to lower time frame entries and then following the trend on the daily time frame, let's say, so that you can maximize on risk to reward?
Yeah, I mean, that's a great question, but at the end of the day, it's what fits you, right? Your personality, the way you see the structure, the way you want to operate, the time that you have in a day to invest in trading and everything that around this. For me, it was just, I looked for the fun part in trading, right? Like in gaming, the same concept. I didn't come to in order to make big bucks or to buy the next Ferrari. I came because I love the fact that you need to make the decision in real time. That's the challenge part of it. And already familiar with the keyboard and the mouse, so it makes sense to me. So this is why I stick to the 1 minute, the fast-paced thing.
Let's take a moment to talk about a partner of the show, a leading prop firm that is Funded Next. And it's important for me to listen to our community to see who are you working with and how can we make your experience better. And the main feedback I heard is trusted payouts, quick payouts, ability to scale, and affordable prices. And Funded Next has ticked all of those boxes, not only being a top 3 prop firm in the industry, but also having on-demand payouts, and every 10% you gain on your account, you will double your capital for free. And because in this industry, trust and reliability is the most important factor, an important guarantee that they have is that if you do not receive your payout within 24 hours, they will gift you an additional $1,000 to your payouts just for being late. So to unlock all of these benefits and work with a leading prop firm in the industry, Funded Next, check out the link in the description or use the code TOT. Would you say you're a competitive person?
I would say, yeah.
And when you have this gamer competitive, I wasn't gaming myself, but just through friends that I lived with at university, I saw how passionate these gamers are and how intense, and they won't leave that chair for like 12 hours a day. But when you have that hyper focus and hyper competitive side, can this be problematic in the markets where you're competing with the market, you're there for long hours and maybe you should walk away? Did you feel that helped you or hindered you?
Okay, there were definitely, I won't lie, there were times that I needed to step away from the market and I didn't. I still remember, tons of hours of talking to my friends and I'm sending them images of me fighting the market, literally fighting the market, like 40, 70 execution in a matter of minutes. And they sending me back, you got to get off the computer, but it's one of the stuff that I love to do. So till this day, right? It's a passion, and so yeah.
How did you learn later on the skill of walking away? Because I think this topic of like psychology, and it's like, okay, well, if you want to avoid losses, after 2 losses in the day, walk away and cut your losses. But in reality,
Exactly.
to actually get up and walk away when you're in that state is one of the hardest things to do. So how did you, as you matured as a trader, build the skill to walk away when you have to walk away?
Yeah, you said it, the mature, right? You grew up, you started to be more than just looking for, the fun in trading, but also actually make it as a profession. And then when you realize this is what you want to do and continue pursuing that passion, you start building those rules, right? And eventually I went into meditations before started to trade, before the opening bell, and do a breathing exercise, during the trading. After each trade, I took a minute or two, just to settle down, write a little bit about what was in that trade and how can I operate it better. And this is something that you need to apply. And, like in a gym, right? You want to go to the gym, you first start, you're doing some exercise, and eventually it catches up.
The morning routine and the pre-market rituals, let's say, I think lately has become very a buzzword, and it's also become an escapism where somebody who is not profitable, instead of looking at their edge and finding solutions in the data, they'll just focus on the morning routine. And I think it's overemphasized. Regardless, I want to hear from someone that is and was doing it. What did you do, and how did it benefit you when you had these pre-market routines?
Yeah, you got to touch, in trading, in order to become profitable, you got to craft a lot of the topics, right, that everyone talks about, the risk management, the edge, the technical analysis, all of those things. And one of them is the fact that you need to work on your psychology part, your well-being, right? So in my case, as I said, I just took, before every opening bell, I took 5 minutes, literally closed my eyes, focus on the breathing, thinking about how I will react when I will have a losing trade and also on a winning trade. So imagining you're in a trade and it goes against you. As long as you become aware of those situations, because when you're trading, especially on a 1 minute chart, in most cases, you're not aware of what's going on. You're making a decision like an impulse decisions, right? But once you are aware on that and you realize this is happening, now you can step back, see the full picture, like the macro picture, and then make a more logical decision. So one thing to do is just 5 minutes before the opening bell, close your eyes, imagine how you will react. Then when it comes to really trading and you see yourself, just before you click in that revenge trade, right, or going all in and you want to blow the account or make it like a home run, stop for a second, take a breath, and then understand, tell yourself, literally talk to yourself and tell yourself, okay, what am I doing? Am I doing the right thing right now? Am I making the right call? Once it's there, you're good to go.
So this pre-market or in general meditation, the real benefit is the ability to use that muscle of pause. Because this thing I was saying of after 2 losses, just stop and walk away. I think that ability to stop is difficult, and therefore the meditation helps in exercising that.
Yeah, controlling that once you reach that moment,
Okay.
And it's like another check in your box. Instead of looking just for the indicator, the price section, the supply and demand, you also do this. Do I need to click the mouse key right now? Am I ready for that trade, to commit to that trade? If so.
Would you also consider other things in your life in terms of if I'm having stressful things outside of the markets, that you'll take time off the markets, or the morning routine was the reset? So no matter what's happening outside, I'm ready for the markets.
I mean, it's very hard to exercise it, right? Because if you came back from work and your boss yelled at you, or you had a fight with your wife or whatever it is, it's kind of hard to shift into that state of mind of trading. In Japan, they have like huge bridges, and gates, And once you enter that gate, it's supposed to, like on a spiritual level, it's supposed to clear your mind and start again from scratch. So you need to do stuff like this. Obviously, it's not easy, but like in anything in life, as long as you keep practicing, you will conquer that.
And on this topic, whilst we're here, anything else you would do as a pre-market process aside from the meditation?
For now, at least, that was the main key.
Okay.
It's just a matter of practicing.
And when you had transitioned towards a leadership position in the prop firm, where you were responsible for capital, other people's well-being, other people's strategy, and coaching them, would this be something you instilled in them as a
100%.
mandatory, or is this something that was only really something for yourself?
No, when I joined that prop firm, I came with the experience and the tools that worked for me. Obviously, it won't work for everyone, and even so, if I'm telling you to meditate, you need to find what will work for you in that area of meditation, right? Someone can breathe, the other one can sing, whatever it is. Right?
Okay, interesting.
You need to find what fits your personality at the end of the day. And so I brought all of those tools to the prop. We did that, and again, someone took it for just listening to music. Someone listened to Mozart. The other guy listened to gangster rap. And that was his meditation. So
I had one friend at university, and before an exam, a big exam, he would go for a walk to a nearby forest, the woods, and he would just go by himself and scream as loud as he could, to the point where he said it would completely drain him. He would have no voice left. And he said that would just help him reset, get rid of all of his anger, emotions, whatever, and have complete clarity. So it is interesting. The word meditation has multiple layers and different benefits depending on the personality.
yeah, because when you hear the word meditation, you always think of a yogi guy that sits and home and stuff like that. But at the end of the day, it's just something that reset your mind. Right?
Awesome. So when you came into the leadership team and you were responsible for other traders on the prop, what other things did you instill aside from this routine?
Still?
What other things did you do or told them to do in terms of strategy or routine, or what other things did you teach them?
Okay, so we started by building their set of mind that trading is a business, right? A lot of the times you see guys that going into trading just because they want to make a lot of money, and they never think about how much they're gonna invest in their business, how is the risk management of the business looks like, the expenses, the ongoing expenses, and the process, because trading, in most cases, you won't make it on your first day, right? You will need to have, at least back in the days, you will need to have at least like 2 years, 3 years in order to start see some progress. So
these traders, they were already traders, or they were new people that you would coach up before you gave them capital?
So most of them were like 6 months till a year of experience in the market. So we taught them, then traded with them every single day. We had coaches. We had meeting before the market opened, in the middle of the day, at the end of the day. A lot of just teaching them about, like I said, the business-wise of trading, understanding that, okay, this is an investment you put in, and you need to handle your expenses. You need to handle the risk side of it. There were guys that had a wife that told them, you got to quit this thing, right? And then you need to talk to your wife and tell her, listen, before you start doing trading, you need to talk to her and tell her, this is what I'm looking to do. This is what I want to do. I need to take a full year in order to accomplish whatever it is. If you do that, then your house becomes something that is very easygoing, right? If you get what I'm saying.
A lot of traders end up frustrated bouncing from website to website, trying to figure out which prop firm is best for them. And that's why I'm proud to bring to you a partner of the show, Prop Firm Match, which is a complete, trusted and comprehensive comparison website. And with all kind of filters on their website, you can select the prop firm based on exactly what you are looking for and see their credibility based on verified reviews of actual customers, and also get insights on how long that prop firm's been around, if they are denying payouts or not. And overall, in one place, you have third-party verified information so you can make a sound decision. decision on where you should put your money. Because PropFirmMatch is the largest comparison website in the industry, they're able to negotiate the best prices and the best discount codes with all of their prop firms. But also with their loyalty program, you are able to collect points from your purchases to go towards even more credit and more discounts in your future prop firm purchases. So go ahead and click the link in the description to research the best prop firm for you and find the best prop firm discounts in the industry. Yeah, because they already have the pressure from the market. You don't want the pressure from the partner as well.
100%.
It seems like when you were in this leadership position, you were focusing a lot on psychology, routine, rules. Where was the time, or when was the time to speak about technicals, edge, and actually strategy? Or would you allow each trader to have that freedom to explore their own edge, or would there be one prop firm common strategy?
No, so first of all, you got to give the space to a trader, right? Because you're trading differently than what I'm trading. And even if I will tell you and show you what I'm doing, not necessarily it will fit you, right? So you got to develop your own edge and your own way or approach to the market. That's the main key. What I can give you is just a structure. I can teach you on why the market moves the way it does. I can teach you about the areas of supply and demands. I can teach you about patterns. But at the end of the day, if you like to trade breakouts and I like to trade reversal, that's totally fine. I can give you rules on how to be better on breakouts, right? Those nuances, eventually you will take them and build your own strategy.
And how did you know when someone was in exploring phase and had the freedom to find what suits their personality versus he's ready, let's put some capital behind him, just so that they're not learning on someone else's money?
Yeah, you see it. Once you talk to a trader and it will go through some phases, and you see the guy learning from, just understanding what I'm trying to explain to him, and then he takes it and it will show you. We had routines like he start to build a playbook, right? So he will show you exactly what he's looking for, how he's going to operate it, exactly how to execute the trade, to scale in, where does he supposed to take his profit, everything around it. Once you understand that he knows what he's talking about and you see a few good playbooks that is trading with, then you start giving him the money. And also that you build it.
And because you have a team mentality on a prop firm, because it's not just now my money and my decisions, it's now other people's money and an office environment. What did you sense in traders as an advantage to be in that environment? Because I'm seeing a lot of disadvantages of, okay, you have other people's money, pressure. You have somebody watching over your shoulder every day, pressure. You have maybe a sense of performance anxiety, so you don't trade when you had conviction, but you don't do it. And then also this idea of, I have a trade, the guy next to me is also my prop firm, has the opposite idea. Now we have conflicting ideas and now I can get confused. So I'm seeing all of these negatives. Well, what were the positives of why someone would want to be in this environment?
You start from the beginning by teaching them that all the big players in the world from day one are doing exactly that, trading someone else's capital. Market makers, hedge funds, portfolio managers, all of them are trading someone else's capital. Even the guys in JP Morgan, they're trading the bank's capital, right? And they are the top-notch traders in the world. So once you understand, once you explain to the guy that this is how it should be, now we're saying, okay, the other guys are doing it, so now I need to do that the same way. And trading someone else's capital is a great way to do so, because you're not risking your own money. So you're detaching yourself from money.
Oh, so potentially it's easier because it's not your
much
money.
easier. This is definitely one of the main points for me that shift my mind as well. When I started to trade someone else's capital, I'm not talking about family, right? Friends and family, because when you do that, it's super hard. I did that. It was super hard because you're still very much attached to it, right? You don't want to lose your dad's money. But when it's someone else that you don't really care about, that's it. You're done. You're free to go. You're free to do logical decisions, like technical decisions.
In the book Mastery from Robert Greene, explains what mastery is, and part of it is having a flexible mind. And what he means by that is when you're a child, a child is very free. He'll do whatever he wants. Right now, if a child was in this room, he would stand on this table and start screaming because he doesn't have the conditioning of what's appropriate. So he said, as you get older, go through life, you're taught, sit this way, be quiet like this, walk like this, talk like this, wear like... So you get a lot of conditioning, and therefore you go from a flexible mind to a rigid mind.
Yeah.
And I think a lot of the industry can do that to a trader without people realizing. When you're scrolling on TikTok, when you're watching YouTube videos, this is conditioning.
Yeah.
And maybe you're getting the conditioning from people that are not qualified to condition you. Did you find a benefit in getting young traders in terms of 6 months of experience? Because you could also get traders that had 10 years of experience and they have a lot more market experience, they have a lot more strategy. Why would you pick the younger new trader? Is it for this flexible mind approach?
Yeah, 100%. Because when you have someone that is doing it for 10 years, even if he's a good trader, you cannot really push him to the next level. You can, but it will be much harder to give him tools that he will actually take and use them in the market. But when you take in someone, exactly as you said, like a kid that just started to play with this toy, you can give him so much, and he will be a sponge, and he will take it and be happy about it. Because he want to try this one and he want to try this, and everything is much more gamey-like and not just rules.
Because even, let's say with the kid example, a kid might go climb something that's a bit too high for him to jump off, and he will jump without fear until he hits the ground and realizes, oh, that hurt, I won't do that again. But again, this is complete openness, and when you have a new trader, you're allowing them to fall in a safe environment because it's not their money. And I think a lot of traders in this day and age give up on trading because they burnt too many accounts, they burnt through the capital, and they are learning lessons, but they're too expensive lessons because it's all of their savings. But in a controlled environment, I can actually see these benefits. What about the idea of on the same team, on the same prop firm, you're managing the same capital, but you have people having different ideas, different trades, even on the same day, one guy's buying, one guy's selling. How did you as a leader navigate that between peers?
So what was the... one way that we took there was to build teams, right? When you have one guy that is making the decision and only seeing what he's seeing, you kind of lose the ability to have more eyes, and you only got your opinion. But actually, when you have a team like 2, 3, 5 traders together that trade the same account together, that way you can watch more trades, you can watch more opportunities to find the next one, and you have a guy that is focusing on finding the stock, you have a guy that is managing the trade, a guy that is executing. So
you divide responsibility.
They're working together, they leaning on each other.
What about risk? Would you allow the individual trader to choose their risk within a certain range?
Within a certain range, yeah.
But it wouldn't be externalized to another person and say, okay, this person is responsible for risk. Or it would be the individual trader chooses their risk.
So but within that team, let's say a 3 guys team, you have the guy that is managing the trade or managing the risk. So he will be the responsible on the capital, right? Obviously, the other guy can tell him something, his opinion, but at the end of the day, the decision of that will be under the guy that's managing the trade.
And who in the team, between these multiple roles of a leader or risk or whatever the different categories were, who would you say has the toughest job? Who had the most pressure?
That's a good one. I mean...
Sounds like the guy with the managing the trade.
I would say the execution, the managing the trade and execution. Because the guy that... But at the end of the day, if the guy that executed the trade did it perfectly, but the stock wasn't the right asset to trade that day, then the first guy blew it.
Also, a lot of the times when I get in a trade that I have confidence in, I'm more willing to watch the retracement and feel okay. But if it's a trade that I know I shouldn't have taken, I'll very quickly exit. Meaning to say my confidence in the trade affects my ability to follow the plan. When you have someone who is just managing the trade, he doesn't have the belief in the trade because he didn't come up with the idea. He didn't place the trade. He's just there to manage it. So when you have no emotion involved, does that help or does that that actually cause maybe mismanagement at times?
Yeah, it definitely helps, but at the end of the day, when they start to work as a team, so if anyone can help each other, they will do so. So at the end of the day, we saw some success.
In the end, as the leader, would all trades go through you, or you would allow?
No, each one takes the responsibility. Yeah.
Okay.
Obviously, we will watch the trades. I obviously traded with them together and made the decisions. Sometimes I sat with the teams, like separately. I took 3 guys, sat with them, traded with them on the same day. We did a whole lot of back testing at the end of the day, journaling obviously as well. Yeah.
Would you have different strategies amongst the traders as a form of diversification, I guess?
One, and second thing, like I said before, it's a personality thing, right? So again, if you understand how the structure of a reversal built, then you need to continue to trade that way. But if you're more of a quick scalper that want to get in very fast on the breakout, that's one thing, and as long as it's working for you, then great.
And on the prop firm, what was your personal favorite trade, A+ setup?
What was?
Your favorite trade type, like an A+ prime setup.
So for me, it's always the reversal. You will see a stock. I used to trade 2 ways. So one will be stocks in play, which are stocks that are gapping up or down. And they gapping dramatically, like let's say 10% down. A stock is gapping down because of earnings, let's say. And then once it drops and reach a major key level, then you buy the dip. Or the opposite way, it pops up, reaches a certain resistance level, and then you sell the top.
You know the phrase where it's like you don't want to catch a falling knife. You don't want to buy in a heavily bearish market. How did you reversal trade effectively and not just keep trying to sell the top in a bullish market?
Yeah, so that's a great question because obviously you don't know, right? You will never know until the end of the move. But you do have key elements that support what you're looking for, right? So when a stock is dropping down and it reaches a major key level, then it makes sense that it will stop at least for one pop, right? And then you look at the volume. You want to see increased volume, capitulation at the bottom, right? So buyers are coming in while sellers are getting hacked or manipulated, right?
How would you view that manipulation on price action?
So on the price action level, you got a few ways. First of all, in a lot of the times you will see few trends before the pop. So you will see a drop, then a tiny bounce, another drop, a tiny bounce, and then on the third wave, the third move to the downside, in most cases you will see that capitulation. You will see high volume coming in at the bottom of the resistance support level. And if you compare the drops, right, you have the first drop, then the second and the third. If you compare them, you can find some nuances that will tell you that the sellers are getting much weaker. For example, the angle of the drop. So the first drop will be very sharp, like 90 degree, right? And then the second drop will be a little bit
So kind of momentum, as you said. You're seeing the momentum shift from aggressive to slowly plateau.
Yeah.
Okay, and how important for you, because I'm comparing it to myself and obviously your colleague Saul that we just spoke to, and he's trading Forex. And in the Forex market, you don't have access to the volume or you don't have the order flow. So we are relying only on price action and then maybe indicators or other things that some people may use. Whereas you have price action plus the volume that you can see. How much of an advantage was it to utilize volume?
Yeah, it's a huge advantage. I mean, the volume is a key element when it comes to trading, in my opinion. And I don't know how you do it on Forex.
I wish I had it, because the more I get to know, the more I'm always thinking, should I transition? Or at least in my investments, I'm using it because I'm investing a lot in the stock market. But then you have your investment side and you also have your trading side, which now later on in your life, where you're busier with other projects, you are still involved in the markets, but to a different capacity where you are now longer term holding, or your average trade was 18 minutes. Now it's long-term investment.
Yeah.
Has your strategy stayed the same in terms of the entry criteria, or is it a different approach when you invest?
So I'm still trading until this day.
Oh, okay, wow.
Just an hourly chart instead of a 1 minute chart, for example. And I'm holding for like 3 days, 4 days. That's in most cases.
Okay.
But for investing, obviously, I don't care about the chart in most cases.
You just take a demand area and a bias.
Yeah,
Okay.
Exactly. Yeah.
How interesting. And when it comes to the volume analysis, now something I'm jealous about, but let's go into how exactly you utilize it for people that are looking to transition toward the stock market or people that are trading the stock market.
Yeah.
How do you utilize volume in a correct way?
Yeah. So again, if you're looking for, generally speaking, are you familiar with Charles Dow?
Yes.
Okay, so the theory would say I think the third element would say something about the volume should be, or the volume should increase while the price is increasing, right? And that's the basic concept. And in most cases, a lot of the guys would say, okay, I'm not seeing an increase, so it's probably not that, or get that a bit confused or mixed. And the idea is to look for different bad signals or divergence.
Yes.
Yeah, exactly.
So price is going up, but volume is going down.
Yeah,
what does this indicate? It means lack of participation.
Yeah, exactly. So price is going up. Okay, so I need to see higher volumes as well. So buyers should put their money when where
their mouth is. Yeah,
exactly. And at the end of the day, if they're not, then it makes sense that the price will actually start to decline. Another thing, as I mentioned, the capitulation, in most cases, let's say a breakout, right? You want to see a clear breakout with high volume in most cases. That's what they'll tell you. But actually, there is a certain amount of volume that if you see it, it's actually represent the opposite direction. So like a reversal. So you need to see a correlation between price and the volume. And if you see the volume increases too dramatically comparing to the candle that just broke the breakout, the resistance, then something is off. They're playing with you. Bull flags, for example, patterns. If you will see volume increase, volume during the consolidation, then something is off. They are trying to manipulate, they are trying to build a pattern that will tell you, okay, it should pop, but in most cases it will pop and then automatically drop after that.
Do you believe that the manipulation, or they, as you're saying, can be a few parties or one party that is heavily influencing market movements through manipulation? Or is this just like a natural battle between buyers and sellers, and sometimes it doesn't make sense, but eventually when you get the movement and then one side wins, then the sellers take over and the market goes bearish? Meaning to say, is it a manipulated market, or is it just the laws of the market that you'll have this battle?
If you ask me, it's manipulated, but at the end of the day, if you go to the basic of it, you have buyers, you have sellers, right? And in order for me as a buyer, in order for me to buy 1 billion shares, I need someone from the other side to sell me 1 billion shares, right? The way that I can create, the way that I can affect you to sell me that 1 billion shares is through manipulation. I need to tell you that the market is going to crash. I need to tell you that the world is about to collapse, right? I need to tell you those kind of elements that the big analyst on JP Morgan telling you that you got to sell your stocks. And once you see that headline, you will probably call your broker or your bank and tell him sell those stocks, right? And now I can buy it from you at a cheaper price. I saw it at the subprime crisis at 2008. I lived in the state back then, and they shouted during the news that the market is about to collapse, and it wasn't at the beginning, right? It was at the end, like around October or November of 2008. So we were like down at around $70-80, something around those lines. So on the SPY. So they told you to sell, and when they tell you to sell, you buy, you sell, and they buy, right?
Yeah, they say
many times.
Buy the rumor, sell the news.
Yeah,
but there's this mentality of like, they come onto the news channels, and they'll say X, Y, Z, but behind they're doing the opposite. This is something that is very well documented. We've seen around.
Exactly.
But I also thought it was old practice. Would you say that's something still happening?
100%. Every single day that you're trading, you will have it. If not specifically in the news, you will have it in the algos that will show you a pattern of a bull flag, but actually it's they're trying to trap you and will move the price down, or they show you that the price is declining and you think that's it, I gotta sell, you will sell it and they will buy the dip. So this is literally every single day, and as you said, I documented myself many times that it's happened before.
For the last 2 years, a proud sponsor of the show is a top-ranked leading prop firm, Alpha Capital. And for the years that I've been working with them and the thousands and thousands of viewers, you guys, that have been working with them through the discount codes of Titans of Tomorrow, it's clear for me to see why they are a top-ranked prop firm in the industry. They have also reached a monumental milestone of $100 million in payouts. And with the multiple step plans and the multiple package types they have, there's going to be an option catered specifically for what you're looking for. So you can buy an evaluation account catered to your needs at the most competitive prices, and with our discount code TOT for Titans of Tomorrow, you're able to get the most unbeatable, unmatched prices in the industry with a leading trusted prop firm. And with that being said, let's get back to the episode. There's many places retail traders or maybe even certain institutions would get involved with. A very obvious one would be like a key level, like a round number or a previous resistance or support level. But then you also have patterns like head and shoulder, Fibonacci. When you look at these lists of very common places people trade, have you found certain ones to be more manipulated or easy targets to say, okay, here's going to be a reversal because this is too obvious?
Yeah, I mean, first of all, the head and shoulder you mentioned, right? That's a classic one. Every single trader on earth know what is a head and shoulder pattern. So it's much easier to manipulate that, because if you see it and thousands of millions of traders see the same thing and you believe that it's going to drop, then it's easier for me as a big institutional or a market maker for that specific stock to start buying that drop, right? So all I got to do is just activate the sales, because everyone is shorting the neckline, right, of a head and shoulder. And then once it drop, I can buy everything and the price will move up. 2016, that was exactly the case in the SPY, the ETF for the S&P 500. JP Morgan launched a letter, like a newsletter to all of the clients, and told them that's the time you need to sell the shares. The head and shoulder dropped on the weekly. Drop, broke the neckline. Smart money bought the dip, and basically the market went up ever since.
With the Forex market, comparing it to the stock market. Now, in the Forex side, majority of retail participants, they're going to be through prop firms, which is usually a demo simulated environment,
Right.
or with brokers, which is often a B-book environment. So therefore, the retail stop losses and this retail head and shoulder pattern might not be the obvious liquidity target, because retail traders' liquidity doesn't exist in the real markets.
Yeah.
In the stock market, is that different because you don't have so many B-book environments?
There's no B-book. Everyone is A-booking. There are some maybe, but in most cases it's A-book.
So therefore, you'd say the stock market seems to be more easily manipulated because there's clear targets of retail liquidity.
Yeah, and when you send in your orders through the broker and through the ECN, and it goes to the market, there are so many places that a third party can come and see the action, right, before it goes to the market.
Before it's executed.
Before it's even executed. We're talking about milliseconds, but as long as I got the information, I can react upon it. So, yeah.
Oh, very interesting. And how important for you is looking at the fundamentals of a stock in terms of the earnings, news releases, and these kind of factors? Are you more price action and volume, or would you look at these fundamentals too?
Yeah, so when it comes to trading, especially on the intraday level, it will be mostly technical, but there is one particular point or topic you gotta put your mind into, which is the catalyst for that stock for that day, right? If a stock is gapping up by 10%, there is something going on behind the scene, right? Earnings or any type of CEO layoff, whatever it is, a new product. At the end of the day, once you understand what type of news is it, you can understand if there should be an extension of the move after the 10% gap, or it should decline. So for example, a new product can push the price just a little bit higher, right? But if Bank of America is targeting, and a big analyst from Bank of America is saying that the price should be 20% more, then it makes sense that a lot of the buyers will start buying and pushing toward that 20% more. So you got to understand the nuances of the catalyst that moves the stock.
Because you've had a bird's eye view in the industry with your collaboration with Fivers or involvement in Fivers, you've seen the behavior of Forex and futures traders and their strategies, their psychology. Have you noticed any difference between them and a stock trader?
I mean, a chart is a chart, right? And the psychology behind it is the same as well. But there are nuances between the markets because, like you said, the Forex market is rangy. So there will be a lot of reversals and less trend following, like pullbacks and trend following. So on those levels. And also the Forex guys are more focusing on, those 28 pairs or 8 pairs, right? The majors. But when it comes to trading stocks, you have like 12,000 symbols that you can trade with. So every day is a new day, unless you're focusing on few big names like Tesla, Nvidia, Amazon, those, which is great as well. But in most cases, if you trading stocks in play, every day is a new day for you. And that's also exciting.
The reason I asked that question is because obviously in the Forex side, it's all about prop firms. Everyone knows props, talks about props, uses props, and even those with the capital to deposit in a broker, they do think, well, I can now deposit this 10K or I could buy challenges and have access to $1 million in funding. That's not my money, and why not? So it's become the new norm. But I don't think the stock world has caught up to this, which is why I wanted to understand what is the difference here and why is it not so commonplace?
Yeah, the Forex and the future industries are huge in the prop. And like you said, it's a no-brainer. I mean, if you can buy a challenge for $50, trade with much more capital than you could ever bring to the table, and not risking your own money, pass the evaluation after even 10 attempts, right? $500 that you spend there, and you trade in with 10K, it makes sense, simply as that. And this is why we have traded pool for stock traders. And the only thing that is different, that I guess the time, right? Because Forex and futures industries for the prop have been around for a long time. Stocks is just starting to grow. And I'm guessing within 6 months up to a year, we will have more guys coming into this area.
As you are maybe one of the only, or if not the only, stock option for prop firms, you're coming up to your 3-year anniversary. And in this time, you've probably had enough data to understand the industry. And you've obviously seen the vast data of the Fivers, which is a top prop firm. Just comparing it, are you starting to see differences in behavior? Or because generally when I think of a stock trader, typically they are a bit older. They are probably a wealthier person because their deposit amount to invest is not necessarily a highly leveraged speculative CFD. It's you buy with your real capital. So usually a more mature trader, usually an older trader, usually a more invested because they're putting larger amounts. And maybe that has certain behavior differences. Are you noticing any of that in the prop side, or are the stock prop traders a new pocket of traders?
Yeah, so the prop traders that we have are actually young guys. Join in from their 20s till 35, that area, and they're all most of them in the US, because we're giving a huge solution in that case. In the US, you need to have at least 25K in order to day trade. It's the PDT rule, it's called. So a lot of the guys just hooked by that, and they saying, like I just said, it doesn't make sense for me to bring 25K from home when I can put $100 and get the same amount, right? So it's just a matter of understanding that there is a solution like that. A really shift coming from the broker industry. We had the broker industry, we had the free no commission that brought a few years ago, and now we were basically the next step in that evolution.
When it comes to the CFD side of Forex specifically, because generally it's a ranging market and predominantly people are just day trading, scalping, and even the swing traders, they're only holding for 1 week. So you don't really have these people that are position trading, holding for months. And generally people are not incentivized to do this because the market is up and down every day. There is sideways price action, there's short-term trends, and there's a lot of volatility and movement. But when I compare that to the crypto market, or I compare that to the equities market, generally they are more trending markets, and specifically the big ones, Bitcoin, Ethereum, or Apple, Amazon, and so forth. Generally, if buying the dip is a good long-term strategy, because these are companies and industries that are going bullish, and if you wait 5 years, you won't be in a loss, realistically, especially the indexes, just the S&P, for example. What stops someone, or how do you view someone coming in, utilizing prop firm capital, $100,000, and then just buying the S&P and holding it for months, and therefore using the prop firm, which is designed for day trading capital, as an investment vehicle to buy Bitcoin or to buy the S&P, because that's a low risk for the trader. It's like, okay, I might not get the most sexy returns of 100%, but I'll probably get 10% by the end of the year. I'll buy that prop firm account. It cost me $500. 10% is 10K. The maths is here for me. How do you view this idea?
First of all, everyone are welcome, right? So we do have day traders.
Okay.
We have a swing plan that you can hold overnight, or day trading when literally you will liquidate at the end of the day. For investors, we still don't have a specific plan, but technically on the swing plan, you can hold your position 3 months until the next earnings, basically. And then we will liquidate your position. We will probably in the future also launch a plan for investors, and we will be more than happy for guys to hold their position for a year, 2 years, 5 years, definitely.
I spoke to a CEO of a very large regulated broker here, the largest one in the Middle East. And I spoke to the CEO and I brought up this topic of, managing risk behind the scenes, because you can A-book, B-book, hybrid, there's all these approaches. But specifically when it came to crypto, and at the time I recorded it, it just reached all-time highs. And he said, look, it's not realistic for me to A-book these crypto traders because, it's not logical to B-book them, because they are just going to buy Bitcoin, hold it until it's new all-time highs, and I have to pay from my pockets. So it's better to send it to the live market. It's well understood in the Forex prop firm space. It's usually a B-book, complete B-book, or hybrid B-book.
Right.
How is it in the stock side?
So we're doing also an hybrid. You basically need to understand who you're dealing with. You have guys that are super aggressive, that will go all in and look for that home run. And in most cases, it won't work. Or you have the consistency guys where you see that they're not putting a whole lot of shares. They're not using the full capital that they get. They investigate beforehand and hand-picking the right stock and the entry and the exit. So once you realize that, you can start to understand better if you want to go with them to the market. And it's not just go with the full account. We might take one order, one trade to the market, or even double it, and the other trades will stay on the B-book. So we're playing with it. We have a risk management, a nice chunk of department there that should do the work, basically. It's not an easy task.
This side is like the gold mine of the prop space. Is like whoever can best crack this data will have the longevity and edge, and I think every prop is putting resource towards it. Coming back to the trading team that you had when you're managing the real prop traders. First of all, if you can describe to me now the difference between the online prop model that we are familiar with versus the traditional real capital prop. What are the differences here?
Yeah, first of all, when you sit in an office, it's a different atmosphere, right? Different energy. You got 70 guys. Some of them want to jump from the building. The other guys are super excited and happy about what they did. So it's an amazing energy. Either way you look at it, it's fun and you feel the guys around you. You can talk to the guys and you can brainstorm and get more out of your trades, because like I said before, you can only think with your mind and your opinion. But if you have someone sitting next to you and telling you, but did you watch this, make sure you watch this, and so on, then it just give you more edge and pushing you. So that's definitely the benefits of an office. On the other hand, of course, when you go online, you can trade from anywhere in the world, and we basically bring in accessibility to everyone. It's not just guys that literally here and can come to the office. So
When I compare my own trading, day trading, which is lower time frame M1, intra-session, average hold time is a couple of hours max. This is very manual trading. This is a lot of monitoring, decision making, and active, I want to call it. And I have my key windows that I trade, so I'm not watching 24 hours, and I have my chosen Euro USD, GBP USD, so I'm not looking at 50 things. But when I compare this, it is a job, it's a responsibility, and it's something you have to give mental focus to. When I compare this to my investing, specifically in the stock market, it's basically being a idea of key level, confirmation, buy, and hold.
Yep.
And now if it reaches my targets in a week, in 5 weeks, in 6 months, I'm very able to detach myself from it because it's not my main thing, number one. And number two, because it's not like a highly leveraged thing. I'm not hyper focused on each movement. And then one day I'll check my phone, it's like, oh, the market went bullish today, nice pop, this is great. But if I took that same swing mentality and hands-off and approach and put it into my day trading, I don't think I'd be able to be so free, because I'd still even if it's like, okay, this is a swing trade, large stop loss, give it time, I'd still watch it every day. Everything, when I wake up, when I go to bed, I'll check it.
Yeah.
What is the difference, or why is there this difference between same person, same psychology, but day trading brings this side out of me and investing brings this more relaxed side out of me? What would you say this is?
The excitement, it's just a matter of looking at the chart and just analyze it. As you said, to make the decision in real time. The excitement will get into your head and will hook you into that screen or the phone, whatever, in order to see that you want to get that confirmation from the market, right? You want to see the results much more faster. So that's the main thing. And of course, when you're doing day trading, in most cases, as you mentioned, on your investment, you're taking it slowly and you're not going all in. But in most cases, in day trading, you're risking a little bit more and you're allowing yourself more because the stop loss, exactly, the leveraging. So those elements.
Do you think, therefore, in a leveraged environment, in a riskier environment that day trading is, that taking that same mentality and trying to be a swing trader is harder? Because in the end, you have your investment mindset, you have your investing, but then in the end, your chosen approach was M1, lower time frame, scalps. Even though you had the skill to be a swing trader, why did you choose to be a scalper?
I mean, for me, the excitement as well.
As in, that's something you wanted?
Yeah, 100%.
Okay, interesting.
I mean, again, when you're playing Counter-Strike and you need to find your next best shooting point, and it's the same thing. I'm still looking at the chart like bad guys and good guys, right? Like fighting each other and how to find the right spot to shoot that person or whatever. So it's really about the just analyzing in real time.
And on the trading floor amongst your team, the few star players that you probably had, those few exceptions that would always perform or would always be calm or would always pull out good returns. Yeah. What did you see in them that was different, that led them to have that success?
You definitely said it, calmer. Definitely, if you come with a calmer background, I guess, or just your personality is more introverse, right? Then it's easier for you to deal with unique situations, because we will all react in some degree to you bought the dip, but it's eventually continued against you, right? So we will all react to those elements. But if you're more of an introvert, if you're more of a relaxed person in the first place, it will be much easier for you to handle the situation. So this is definitely one of the things. And just the fact that you are a hard worker, because there were guys that used to stay all night at the end of the session, continue to journaling, continue to craft their strategies and understand what they want to do for tomorrow. And there were guys that once they hit their daily loss, were out for the day. So it's a different type of person.
When you compare the behaviors and the psychologies and everything you saw in the real prop firm in person, with the energy of the room and the team mentality and the coaches and everything, all the resources you had there, and then you see the results of people, and then you compare it to the online prop firm now, and they are trading in isolation, they're learning online, they may be learning alone, figuring it out. It is a completely different world. And even though the capital might be the same, because in prop firms you have the leverage now, have you found a similar success, or is it completely different in the online space?
It's a different beast, no doubt. I mean, the guys online today, a lot of them are not necessarily looking for the classic trading, but actually, and you talked about it with Saul, about evaluation, risk reward on evaluation and payout, and trying to hit a home run, a lot of them. And in the office, if I had one guy like this, I would kick him out immediately. But in our case, when you have thousands of traders every day trading, some of them will try to hit that trophy and just go all in. Some of them will take it serious and start to work and craft their strategies like the guys in the office. But you will have a bunch of a mix between those. Give me the Lamborghini tomorrow, I want it, or you know what, I know that I need to invest here and take my time in order to succeed. So
and the guys on the online space, which is going to be most of the people watching, what are they doing? The ones that are making good payouts, what are they doing? What is their behavior that you see?
Right. So first of all, we saw that once a trader has boundaries on his risk side, so limitation on the risk, he will be more or she will be more successful, right? The more boundaries you give, the better the trader will be. So for example, we have a daily pause. So if you reach that, you're done for the day, right? Let's say $700. Most of our funded traders, and I'm interviewing all of them, most of our funded traders will say that this tiny key saved them and made them profitable, right? Just the fact that we're stopping you. You don't need to take a breather after 2 losing trades, right? Like before we talked about. I'm stopping you. I'm telling you, you're done for the day. Forget it. Come back tomorrow. Once I'm doing that, you're not blowing your account. You know that you need to relax and take that moment to yourself. So that one. Also, if we will limit the number of shares you can buy, right? There are guys that buying 10,000 shares, 20,000 shares, and we say, relax, start slowly with 3,000 shares. See how you can progress. And he actually making progress, right? Because we limit the risk element. Okay, so that's definitely one. And of course, the classic, they scaling into the position, they looking for the A+ setup. They're not trying the B's or the C's. They're actually waiting for the A+ setup, patiently doing 2 or 3 trades a day. There are some exceptional traders that will execute like 50 trades a day or 100 trades a day. We have great guys like this, Jordan, for example, but it's very unique one. In most cases, they will do like 3 trades
but
a
even
day.
2-3 trades a day seems quite active, quite aggressive.
No, that's a solid one. I mean,
I mean, at least in the forex side,
12,000 stocks, 12,000
yeah, true.
symbols.
There's opportunities all over.
Yeah.
For me, I would be shocked if I took 10 trades in a week. I'll be like, what?
Wow.
I've been too busy here. But I'm also looking at only 2 things, so
exactly.
it's completely different. What about average trade duration? Have you found that the more successful traders are holding for shorter or longer? Any pattern there?
Yeah, so in this case, they actually, most of our traders are day traders. Their average time will be, on the successful one, will be up to 10 minutes. So, very short term, selling the top, buying the dip. A lot of them are shorting penny stocks.
So they're basically reaction scalps. You find a moment in the day of manipulation, high volatility. and you're in and out 10 minutes.
Right. Yeah.
Okay, and have you found, because this is something you were doing too actually, have you found certain things that would increase your probability to know where a reaction is going to be? Is it just key levels, or is it this volume price analysis?
Everything together. I mean,
Okay.
you will see, for example, on the penny stocks, it's much easier to do. I actually took a challenge on myself to trade penny stocks. I never done that. So trade penny stocks and shorting them, right? So
Only shorting.
only shorting, because
Okay,
a lot
interesting.
of our guys are shorting penny stocks. They're waiting for the pump. It reached a major level, looking for the volume, some price action, and shorting the top. So a lot of the guys are doing that, and they're doing it pretty successfully. And there are also nuances there. You need to understand if, because when a stock like a penny stock is popping, it could easily go from 200% to 500 and 1,000%, right? In a matter of minutes. Yeah.
Wow.
So that's how crazy the stock market is in a good way. So
I mean, it's the same as meme coins at this point.
yeah,
It's no
exactly,
different.
similar to that. So you need to understand if, you see the first pop and you say to yourself, okay, is it done for the day? It's going to drop, or there's another leg to the upside, and so on. And the technical key levels, and also the catalyst, why does it pumping up, right? There's something really about the asset, the company, or we actually just seen a classic pump and it will immediately drop. So those elements will give you a little bit nuances in order to understand if that's the top or not. A lot of them are using a short, like a tight stop, right? They will enter. If it's popping up a little bit more, they are done, and they will try a few times until they get it.
I finally have a special offer to share with all of you from the US, or my futures traders, which is over 20% of the listeners of the show. And that is Alpha Futures, a leading futures prop firm that is working with Trader8 and NinjaTrader that are compliant with CME regulations. With the largest end of day balance drawdown in the industry, a 90% profit split and same day payout. And with the most competitive pricing in the industry, with accounts starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So why not get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and larger capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry, to make this a home run offer if you are a futures trader.
And usually the most successful, what kind of risk reward and win rate profile do they have?
So it varies, of course. You got the guys that have high success rate, a little bit lower risk reward, like a 1-to-1, 2.2. And you have the guys that actually using more of a risk reward type, but lower, like 30% success rate.
Okay.
Yeah.
And when you were trading in the professional prop, what kind of successful traders, win rate and risk reward, what did that look like?
So it's also pretty much the same on that level,
okay.
but the idea is also on the personality level, right? You could be, for example, for me, I'm a high success rate, lower, a little bit lower risk reward, although my risk reward is fairly good, but I'm aiming for better success rate.
Okay.
But you will see guys that doing 30, even 25% success rate, and
high risk reward.
Super high risk.
Yeah, to be
reward.
honest, if I'm to compare, my personality is not like yours. My preference is I'm happy to have a 50, 40% win rate, because I know I can increase my trade frequency. I can take more trades.
Mm-hmm.
And I know my risk reward will support me. And therefore I'm in the market a lot, which is my personality. I don't like sitting around watching and doing nothing.
Yeah.
So I will manually lower my win rate, use my risk reward as my support, and increase my trade frequency, which in the effect increases my rate of return. But I think other personalities will be like, no, I need an 80% win rate. I need to take it easy. It's the personality types.
So in that case, what I'm doing in most cases, it basically is scaling into the position, and then I'm allowing myself the flexibility that the stock can go against me. For example, if I'm buying the dip, I'm not going all in, right? I'm buying a chunk, like 20% of the total risk that I'm willing to take. If it's dropping down a little bit, I'm averaging my position and adding more to the position. Now, I got to say this, because if the guys are listening right now and they hear me saying averaging on a losing trade, most YouTubers will tell you that it's not something that you need to do. But as long as you're within your risk parameters, you're willing to risk, let's say, $100 for a trade, right? You entered and risking $20. Now it's dropping down. You add in another risk of $20. That's totally fine, right? You are losing, but you're within the $100 that you're willing to lose. So I'm basically buying a whole lot of shares across the accumulation, basically. And even if it's dropping against me, I can add more because I'm staying within the risk dollar that I'm willing to take on that trade.
But on the flip side, you will have certain entries where you only got a small part of your total risk, and therefore you caught the move,
Right.
but you didn't get enough profit because you didn't get all your entries in.
Right.
Is this a disadvantage that you're okay with?
Yes, on two levels. One, in most cases, when I start my trade, like the 20%, I don't care about the execution. So I'm just throwing the number, throwing the order just to be in that trade, just to feel that trade, right? To be committed to that trade. So I don't really care if it will go against me. And in most cases, it won't go to my favor immediately because I'm entering earlier than I should, right? And second, I can also add when the price is going to my favor. Let's say it bounced, it's pulling back like a retest, and then I'm adding more to the position. So I can always, just add to my favor as well. So in that case,
Very interesting. The idea that you're holding a trade for minutes, 10 minutes, 20 minutes, an hour, brings me the thought of how do you use bringing your stop loss to break even? How do you use this as a tool to protect yourself? Because you're looking for reactions, session reactions. And if you see manipulation, divergence in volume, and then you get in, and then you don't get the reaction, this is now, the trade is not going in your favor. Will you quickly break even, or do you give the trade space to play?
I'm not using stop losses at all. So
I didn't know that. Okay.
this is a statement for that.
Why?
So I'm not using stop losses. Obviously, not a hard stop loss in the system. Obviously, mental stop loss. I know what I'm willing to lose on that trade. And from here, it's about managing the trade, right? The most important thing, at least in my eyes, is managing the trade. So if I'm executing the trade in a wrong place, so-called, it doesn't really matter as long as I'm playing it the right way when it moved against me or to my favor. So in that case, I won't go into break-even. I don't care about the break-even thing. I'm either losing that trade or making money on that trade.
Okay.
It could be losing less on that trade. Let's say instead of $100, I'm losing
move it a bit.
80.
Okay.
But basically, I'm not breaking even. I'm giving it the time because I'm not really responsible of moving the trade, right? It's not me that moving the stock. So I'm just playing with it.
But when you have, let's say, the mental stop versus a actual order of a stop, let's say you're willing to lose $100 over 30 points, and then price comes to your level and hits your stop loss, perfect. You lost exactly $100. In the other side, you might have a scenario where price comes slowly and consolidates around your stop loss, and you're like, okay, it's not looking good. You lose $101, no problem. But then you have another time where price just drops, and instead of losing 100, you lose 120 or 150. You can lose a lot more than you expected because you're monitoring a bit of delay, a bit of decision making, and you end up losing more than you should have if you had a hard stop. You're obviously aware of this, but what is the reason you still choose this option, even though there is this problem at times?
Because first of all, it's a rare situation when you will see a major drop against you. That could go against you, and like you said, I will lose so-called 105, 110, right? But at the end of the day, it's better, at least for me, it's better to give the space for that trade to work and actually managing it, comparing to the fact that I need to close that no matter what on 100. Because it might drop to 105, and I'm okay with 105 as well, and then it will bounce back.
So how do you stop, let's say, the voices in your head, psychology coming and saying, okay, I'm at minus 110, but it's looking good, minus 120. No, it still has these things, I can still hold it. And next thing you know, you're just lying to yourself, and you allow this 100 to become 300. But then when you look back at the next day, you're like, no, I made things up in my head. Because whenever you have conviction, the brain will tend to see only things that is in its favor,
Yeah.
and you will very easily ignore the problems, and then you have a bias, and then you're fixated on it. How do you avoid this happening?
So you're taking me back to my biggest loss story. There was a time a few years ago I lost like in 3 days 91K.
Wow. Okay.
Yeah, that was a big shocker even for me back then.
And this was prop money or your money?
My money.
Gosh.
And it was so basically the same as you just mentioned. I used to lose like $10,000. That was fine for me, even 15. But 2 hours into that trade, I was already down 25K. And I kept telling myself the same thing as you mentioned. Okay, I can fight my way out of it. I will add more to the position. I will play with it, manage the trade and everything around it. And it didn't work eventually. And that was the time when I was the head of the traders in that prop. The capital was mine, but I was at the time trading with the guys, right? So it's not just about me not closing that trade. It was also the way that everyone looked at me and say, what the hell are you doing? You're teaching us, you're showing us every single day that you need to close the trade and you're not doing that. So it was a whole lot of pressure.
How long ago was this?
Roughly 6-7 years ago.
Okay, so quite a while ago. And since then, I'm sure, as they say, your biggest loss is your biggest lesson.
Yeah.
What did you learn from that period?
A whole lot. First of all, after that, I went home and just craft the hell out of my risk management and everything involving the number of shares I'm adding to the position, the places I'm adding in, everything involved around that. I had huge Excel sheets, that I played with the numbers and see how much capital I need in order to buy X amount of shares on each tier or each place that I'm adding to the position. And second, I felt at the beginning, I felt kind of, I can win the market, right? Because before the trade, I knew what I'm doing, and I knew what I was doing, and it felt good. And all of a sudden, the market slapped me in the face and told me, listen, sit, be humble. Although you know what you're doing, you need to continue to play by the rules, right? So that's the main key.
What about, because everyone has a losing period and everyone has this calamity trade. Yours was probably a little bit bigger financially, but I've had my periods too where I just look back and think, what have I done? And you just feel hurt. And I think every trader has walked through that moment. But apart from the lessons learned, which you can look back on 6 years later and smile about it, but in the time it was very serious. Excuse me. And the days after that trade is also a make or break moment, because I think you enter a fight or flight reaction, where I've spoken to traders. I had one on the show recently, and he said he was also working in a prop firm, a real prop firm, and he just didn't take a trade for 3 months. And then eventually his manager of the team said, okay, go and risk and make $50, because I know you can make $50, just to get the feet back in the water and slowly build the confidence. And for him, in a fight or flight, he went into flight. He was paralyzed, and that was his emotions. Yeah. In those situations when I've had it, the days after, I'm ready to fight. And then I need to recognize, okay, I'm going in too aggressive. I need to calm down. There's no need to win back that loss in one day. You can take your time. It's going to be a process. Exactly. But either way, there is both sides, fight or flight. What did you experience after this 90K loss in the coming days and weeks, and how did you manage the recovery?
So first of all, once I closed that trade on Wednesday, I remember it vividly.
Even the day.
So I closed that trade at 11 Eastern time, and it felt a relief, right? Because finally I'm not there. That's it. The trade is done. Doesn't matter what happened. I lost the money, but I'm done. I'm out of that situation. And then I took 2 weeks to clean my head, go through, as I told you, just on the technical level side of things, the Excel sheets, obviously went through the charts, see what I did wrong, what I could improve for next time. And and I knew, and that was for my advantage, because I already knew what I'm doing. I started to convince myself again and tell myself, you know what you're doing. You know, you messed up here, but at the end of the day, you know how to trade. So just get back on the horse, take it slowly, build it again, and you eventually will reach that moment that you're moving forward from that loss. So it's just a matter of taking a breath, just outside of trading, not touching the keyboard. That was literally the first time I took so much time out of trading, 2 weeks. Even when I'm flying for vacations, I'm taking a laptop and trading.
And
at that
airplane
time.
Wi-Fi is still there. Yeah, me too, me too.
So it's just a matter of taking the time off. And really, even if you're just started to trade like 6 months and you're hitting that major loss, it doesn't have to be, by the way, a big money-wise loss, right? I spoke to a trader. She told me she lost like $300, but it was so massively messing up her mind that she had to take like 3 months out of that trade, out of trading in order to get back.
Do you believe, because you've obviously worked with a lot of traders in a very professional way, do you believe trading is for everyone? Do you think everybody has the strength, the courage, the mental capacity to see through the highs and the lows, or is only for certain people that have this more calmer personality?
I think for today, everyone can do that, right? Because of the solution that the online industry and the online platforms generally, it just gives you the ability to trade, even if you're not a super successful trader. And this is also something, a myth that a lot of the YouTubers will tell you about, right? They will show you the Ferraris, but you don't really need as a trader to reach that level. You don't need to make 8 figures, right? Most of us, like general, regular human beings, will be very happy to make another $3,000 a month, right? $2,000, $5,000. So once you realize you can do that through trading, and I believe anyone can do that, it's just a matter of how much you want to do that and the tools that support your environment, then you can actually focus in on that and succeed in that, especially in today's market.
Yeah.
So
I did a ChatGPT calculation with my brother, and he's 22, and I told him if he was to invest 100 pounds, because he's in the UK, but $100 per month, sorry, $100 per week from today, every single week until the age of 60. And I told him, guess what you're going to be worth. He said, I don't know, like 100K, 200K. I was like, no. And I showed him on ChatGPT, 1.6 million.
yeah.
The power of just investing in the S&P and putting money every week automatically from your bank account and never looking at it again. Meaning to say, if somebody's coming to trading to get the riches, whatever, if you can now go to a prop firm and aim for like a 30K payout, which so many people have done, and it doesn't need to be tomorrow, it can be over 6 months, it can be over 3 years.
Exactly.
Take your time, 30K, 50K. This is a substantial amount of money to invest, and giving it time, allowing compounding interest to take care of the rest, you can achieve a lot of your financial goals. The only difference is people want it tomorrow and not at the age of 60. So then you got to think of other things. But to your point of the trader going from $0 to $50 million just from the markets, super, super rare or unheard of. So the achievable side is people make a couple $100,000 from trading, maybe $1 million or $2 million. This is where most people achieve. And then what do you do with that money afterwards is what counts.
So it's like Ronaldo or Messi, right? How many players are in that level?
Yeah.
2 or maybe 10, right? But at the end of the day, there are tons of other players that are great players, traders, making money, and it's simply as that,
Yeah. As we wrap up the episode, because you've got almost 2 decades of experience, but also now with your prop, a bird's eye view on a lot of traders' behaviors.
Yeah.
I want to give you the opportunity just to give some general advice for someone who's in their 6 month to 1 year mark, as a lot of the professional traders you would deal with. What advice would you give them from your years of experience?
First of all, use a prop firm. That's by number one. And I'm not marketing it. I'm literally 100% believe that you gotta work in a prop firm. It doesn't make sense not to do that. Taking your 5K, 10K, 25K to the broker and risk it, it just blow my mind, that guys are still doing that. That's the first thing. Because once you're in that stage of 6 months of a year, you can learn, and the learning curve could be much more shorter for you in order to reach that payout, in order to reach that profitability. And this is basically what we're doing. We're giving you, you trade in someone else's capital. You have enough capital that's worth your time, actually, and you're not spending hours and hours to make $100 a month. And with the right tools that we carry, like the risk management tools, the daily pause that I mentioned, and the rest of the mechanism behind it, you can actually perform much better than you could ever imagine or did on your broker account. And we see that all the time. I got funded guys that making $50,000 payout, but they actually couldn't make $1 on their broker account.
Yep.
So...
Yep. Michael, you were a stock star today. Thank you very much for flying in
Thanks
and joining us on the show today. Thank you, bro. Boom. Perfect.
Introducing the man behind one of the largest prop firms in the industry, and with nearly 2 decades of market experience, he has walked the walk as a trader.
The way I approach the market is I divide my entry into different small trades, and then I manage all those trades as a whole setup. So that gives me flexibility, and that active trade management, adding to wins, adding to losses, you can make the whole setup a more profitable one. And that's what allows me to keep a very high win rate.
Introducing Saul Lokia, the CEO of The Fivers and a seasoned scalper in the market. In this episode, Saul unveils not only his trading strategy, but also reveals the leading mistake that causes most traders to blow accounts, and the simple solution that those who achieve payouts actually do.
It's becoming easier with AI and machine learning to understand if a trader is going to make for a payout or not.
And just out of curiosity, which ones have you found to be more consistent?
That's very clear to spot and to see and to explain, because a profitable long-term scalper requires more management, patience, discipline. Most of the traders are not there yet. So most of the traders I see making payouts and getting to larger accounts are swing traders, which just requires, a good signal, a good entry, and then letting the trade go in your favor.
Maybe 20 or 30% of the guests I've had on the show speak bad on prop firms. I'm a big fan of prop firms. I think they're a great tool. Yes, there's denied payouts. Yes, there's people that got scammed, rug pulled. I'm not denying that. But at the same time, there is people that are 18 years old, made $30,000, life-changing money. There is wins and there is losses in this space, but overall I think it's a net positive. For someone that is watching, what would you say to them? So let's get into, first of all, the 2010 era.
Yep.
So this is before even I came across trading. I started in 2015. But as you said, the social media presence wasn't there, the marketing wasn't there, it was probably harder.
Yep.
But at the same time, someone can look at the industry now with the mess that it is, with its pros and cons, and say it's hard now. So now that you've seen the industry navigate for more than a decade, how do you view the social media elements and just the ability to learn and find correct guidance compared to your era where it wasn't the same?
Yeah, so I think the same problems we have with social media today are the same we had back in the day, which is creating unrealistic expectations on traders to what's achievable consistently. You see the flashy, you see the cars, you see the Lambos, you see all of that, and it always looks like it's easily achievable, and it's not reality. When you start trading, it takes time until you understand what you're really doing and your strategies inside out. And if you don't have that mentor to really guide you on the blind spots of being a trader, sometimes you win money and you don't understand why you're winning, and you lose money and you don't understand why you're losing money, because the strategy, you're performing the same signals, the same strategy, and you don't understand why sometimes works and sometimes doesn't. So I think those are the blind spots that takes a lot of time for traders to even understand they exist. The FOMO and the over trading, and am I using the right strategy to my profile as a trader? Am I using the right strategy at the right time? Maybe I don't have, maybe my profile is not being a swing trader.
You mean based on personality?
Yeah, personality and psychology.
How would you connect these dots of personality type or psychology type to how someone should trade to their own strengths?
That's the question. Everyone's different. Everyone's reality is different. So you might have a different trading session. If a forex trader, you have all all day available for trading, but maybe you have a job or something, so you have little screen time, or you have the whole day for trading. So if you're gonna be scalping, you better have more time to trade, right? If you're gonna be just doing position trading, you might not be doing forex. You should be maybe trading stocks. You know, the forex market is very rangy. So understanding which market, what time frame, what if you're gonna be position trading or scalping, that takes a lot of time. And if there's no one there to guide you on what's your individual situation, what's your individual reality challenges, blind spots, and help you overcome those, it takes a lot of time to figure that out by yourself, right?
And what worked for you in the end? Which approach?
So I was there, and I was, I discovered a guy who used to taught trading pin bars on the daily charts. And you were supposed to hold your trades for days until the daily candles open and close. You would hold your trades for weeks. And I couldn't sleep at night, just thinking on the P&L. And as you grow your account, you have thousands of dollars floating or hundreds of dollars floating. I couldn't sleep properly. And at some point I understood that wasn't working for me. Okay. I used to close the profits early, or I used to leave the losses run more than needed. And slowly I understood I needed to go to lower time frames. And slowly I went into scalping. Today I scalp even the tick chart. I hold there's a trading room for the company, and I join the trading room every 2 weeks or every week, and I show what I do there, and I trade the 1 minute chart.
You went from the opposite end daily.
The opposite end, and I'm aware it's not the most efficient way of trading. When you scalping, you pay a lot of commissions and you pay a lot of spread, and you work harder. And you take little profits every time. So you work hard in order to build your account up, but it's just the way it suits my personality, because I can open a session, manage my trades, and end the session. I don't need to leave them open for longer. I don't need to go to sleep with a trade open. I don't need to do that. So even if that's not the best way to trade or the most efficient way of trading, is the best way for me, and I'm successful.
It's interesting because, of course, there's pros and cons to swing, and we can call it hyper scalping, even. But there is, for example, personality driven. So in your case, you probably felt the weight of, I enter a trade on the daily time frame, and for 3 days it's consolidating on my entry, and that's thoughts every day. Or then maybe it goes towards your profits, and you're like, great, I'm seeing big numbers now. But then a healthy 50% retracement. This is normal. But then you see the numbers going down, and I guess this roller coaster was not something for you. When it comes into the lower time frame scalping, I get what you mean by it's more work, because there's more decisions to make in a shorter amount of time. But on the flip side, there is also, you can gain the same risk to reward instead of days or weeks. It can be done in minutes. So you have quicker feedback. You have, depending on your beliefs, but more clarity on the lower time frame. Now that you've had a taste of both sides, apart from your personality or your preferences there, from a technical perspective, from a trader watching, what would you say are the pros and cons from someone who is daily time frame swing trading down to M1 scalping?
Again, I think there's pros and cons for all styles and all time frames, as long as you understand what are the statistics behind each one of the styles, and you understand them and you embrace them and you're willing to work with those stats, you're good. For example, I scalp, and I know my strategy or my style of trading has a break-even, slightly negative risk-reward ratio, for example. But I keep a very high win rate, 80 plus win rate.
So you're a good trader is 1-to-1, or maybe even less.
Yeah.
Correct. Interesting. Okay.
So I win, I win a lot of trades, a lot of trades, dozens, hundreds of trades. But when I lose, I might end up losing, the whole setup. I might end up losing more than my wins.
Very interesting.
So I'm fine with that. I live that reality, and I know as long as I'm keeping my high win rate, I'm good. If you would, when you just open YouTube and you listen to someone, you will always hear try to keep both high, right? A high win rate, a high risk-reward ratio. I've seen very few traders, and from my position today, I scan thousands of traders. Very few traders that can keep both ratios high consistently in long term. So there's always a trade-off on the trading style you're using. And as long as you understand the reality and the real long-term stats of both, and you can keep to them, and filtering out the bad setups and just sticking to the A+ setups and performing well, I think the pros and cons, they just come down to screen time, efficiency on training costs, decision making, speed, all of that. But again, it all comes down to what's best for you.
Let's take a moment to talk about a partner of the show, a leading prop firm that is Funded Next. And it's important for me to listen to our community to see who are you working with and how can we make your experience better. And the main feedback I heard is trusted payouts, quick payouts, ability to scale, and affordable prices. And Funded Next has ticked all of those boxes, not only being a top 3 prop firm in the industry, but also having on-demand payouts, and every 10% you gain on your account, you will double your capital for free. And because in this industry, trust and reliability is the most important factor, an important guarantee that they have is that if you do not receive your payout within 24 hours, they will gift you an additional $1,000 to your payout just for being late. So to unlock all of these benefits and work with a leading prop firm in the industry, Funded Next, check out the link in the description or use the code TOT.
No.
Do you believe that a high win rate and a high risk reward, are they something that they are connected, that once your win rate goes high, naturally your risk reward has to go lower and vice versa? Or is there people that you've seen, or is it a truth in the market that you can sustain both to a high level as long as you master something else?
I just know what I see, from all the accounts. I know the traders who have very high win rates, they tend to have a 1-to-1 risk reward ratio. And traders who have very high risk reward ratios, 3-to-1, 4-to-1, even 2-to-1, they have a break-even win rate, or even negative, they're both profitable, right?
Yes.
But I've seen very few trades or traders having a 3-to-1 win rate and a 70 plus or 80 plus 3-to-1 risk reward ratio and 70 plus 80 plus win rate. I've seen counted ones.
And in terms of, let's just say, longevity of a trader,
Yep.
Because I'm sure you've seen people that are consistent for 2 weeks, 3 weeks, and then blow an account, or others that are consistent for months and then somehow blow an account.
Yep.
Which approach in terms of high risk reward or higher risk reward or high win rates do you think preserves consistency in the market to stop somebody hitting a spiral of negative emotions and then end up blowing the account and denying themselves of their own payouts?
I think in prop firm eras, the profile of traders and the behavior of traders have changed from back in the day when we used to trade only brokerage accounts. The fact that traders are developing the skill of getting paid and not necessarily the skill of trading. Okay.
Gamifying the prop firm industry. Okay.
And they counting if they're profitable or not profitable depending on how much they're investing on challenges against how much they're getting paid of trading companies, and not necessarily on their P&L, because we have a lot of traders. We pay to traders who are negative on the P&L. You know what I on the overall P&L, because you may pay them a payout of, let's say, 2K, and then they lose 5K or 10K. So the trader is profitable, on his payout to investment in challenges, but on his P&L, he's negative. So going back to your question, I know traders in the fibers who make the most money and who gets to the highest accounts. They're not scalping, they're holding trades for longer, and they tend to aim for larger risk rewards against win rates. So they're focusing more on large risk rewards and not so much on win rates.
With regards to your own approach, which I'm very curious about, because you've said some things that I've actually never spoke to someone. First of all, is someone on the lower time frame, M1. I think a very widespread misbelief is M1 is noise, and lower time frame you cannot find clarity. You're going to end up either taking too many losses, too many decisions, and too many emotions. Whereas for you found on M1 more clarity, more information, and a very high win rate. So completely the opposite of what people would expect. Yeah. What is it in M1 that you like, and how are you able to sustain a high win rate when there is more decisions to make per day?
I think that's a great question. when I'm trading, I think I'm more focused on the trade management than on the entry and exit of the trades. And I'm more focused on the trade management than on the direction of the trades. Okay, I believe I trade Forex. That's my bread and butter, Euro USD, dollar JPY. So the Forex market by essence it's a rangy market. You don't want your currency going 10% up and down against any other currency. Okay, that's not the purpose of the of currencies on countries. So I will find a setup, and then I will find key levels. For me, supply and demand, that's what I trade. I find the key levels where strong movements were initiated, either to the upward or to the upside or to the downside. And around these areas, I'll try to make my entries. So the way I approach the market is I divide my entry into different small trades. Okay, so instead of going, let's say, one lot, I go with 10 mini lots. Okay, so I divide my entry into better and more precise entry points. And then I manage all those trades as a whole setup.
Interesting.
Okay. So then I'm not so engaged into one of these trades. I'm more focusing on the whole setup. Okay, so the whole lot, the whole 10 mini lots, and not each one of those mini lots. So that gives me flexibility and that active trade management, which is also, a pivot point in my career as a trader, going from passive management into active management. That was an aha moment, because when you just passively managing your trades, you're just letting the market stats to play themselves. But if you actively manage your trades, so if you add into trades or add into wins, add into losses, you scale out of wins or scale out of losses, then you can make the whole setup a more profitable one. And that's what allows me to keep a very high win rate.
Okay, there's a lot of things I can explore here. So number one, let's say your initial point of interest, supply and demand. Before we get into the entries, how are you qualifying a supply and demand? On what time frame, what size, what criteria inside the point of interest, just so I know what are your key levels.
Okay. It's always challenging to explain all of this without showing the charts, okay? But I'll try to make it as clear as possible. So I start off the daily charts, and I try to get my bias from there. I'm trying to understand if today's day has more chances to go bullish or bearish, depending on the overall trend on the dailies. So that gives me a bias for the day. Then I go into the hourly time frame, and I just mark the key levels, those supply and demand areas. And an ideal setup is when I have an entry either on the 5-minute chart or the 1-minute chart, on a supply or demand area from the hourly charts that aligns to the daily bias. So if I have my bias from the dailies, my levels from the hourlies, and my setup all on the same direction, either bullish or bearish, that's a winner, right? That's an A plus setup for me. If something's not aligned on direction, then I know I need to reduce my risk or reduce the lot size I'm using. So that's kind of what I'm looking in the market every day. And then my management happens on the 1-minute chart.
So when you have, let's say, a bullish daily bias, a 1-hour demand area aligned with that bias, and then you mentioned 5 and 1 minutes, are you taking that 1-hour zone and refining it on M1, or are you watching reactions in the zone?
So I refine on a 1-minute chart just to have a more precise entry point, and then I look for the setup. Could be a breakout, or could be a retest, a reaction on the area, and then the retest of the 1-hour chart, and then I manage everything on the 1-minute chart.
And you mentioned you distribute your, let's say, $100,000 account, 1% risk. You're distributing $1,000 entry of risk across this demand area, refined to M1. Is there a specific strategy where at the top of the zone on a demand area, you go heavy first and then less and less, or is it the opposite? It's 5% of your entry and then more and more as you get deeper?
Yeah. So usually, if that's a good area, you tend to see a strong reaction of the area. So back in the day, I used to wait for confirmation, a pattern, whatever it is, and many times I would, the reaction is so strong that would be left out of the trade. So at some point, and if the way I approach the entries without confirmation. So because if I'm going without confirmation, I start small, and then if it goes deeper into the demand area, I add into that entry. but the overall risk, all my stop loss are below the demand area, and I'm not risking more than the, let's say, 1% risk. So I start small and then I add into it.
So I'm seeing you're weighing a few things. Number one is the cost of, let's say, price comes all the way down to the lowest point in your demand area. So this is ideal. All of your entries got triggered.
Correct.
However, the initial entry had a wider stop loss. So then your overall risk reward is lower compared to if you had one entry with the smallest stop loss compared to this distributed entries. But then on the other side, which you're balancing against is, well, what if it taps the top of the zone and flies?
Correct.
At least I have something in the market.
Correct.
Do you think this is a more worthwhile approach than just somewhere in the middle of the zone, have a equilibrium of average stop loss and one position as opposed to maybe 5 things to manage?
Yeah, I think that's something you need to test to see how many times the trade would trigger you and how many times you would be left off the trade. For me, I like being active, so I'm happy going first, and then if it goes to the middle of the area to the bottom, to add more into it, just to be active in the market.
A lot of traders end up frustrated bouncing from website to website, trying to figure out which prop firm is best for them. And that's why I'm proud to bring to you a partner of the show, Prop Firm Match, which is a complete, trusted and comprehensive comparison website. And with all kind of filters on their website, you can select the prop firm based on exactly what you are looking for and see their credibility based on verified reviews of actual customers, and also get insights on how long that prop firm's been around, if they are denying payouts or not. And overall, in one place, you have third-party verified information, so you can make a sound decision on where you should put your money. Because Prop Firm Match is the largest comparison website in the industry, they're able to negotiate the best prices and the best discount codes with all of their prop firms. But also with their loyalty program, you are able to collect points from your purchases to go towards even more credit and more discounts in your future prop firm purchases. So go ahead and click the link in the description to research the best prop firm for you and find the best prop firm discounts in the industry.
And are you managing once all entries are? Now, how many entries would you do actually, out of curiosity?
There's no rule. I mean, let's say if I have these 3 entry points, because I have the top of the area, the middle of the area, and the bottom of the area, could be 3 entries, or could be each one of these entry, let's say 5 trades or 10 trades. Just because that gives me more flexibility on managing everything.
What causes that difference between 3 and 5?
Just the amount of the lot size, the overall lot size I'm using, and how much flexibility I need. It's very discretional.
Is that based on what's in the point of interest, or is that based on how price is reacting in the zone?
It's everything, but it's something. It's something you get like a naturally got used to
Instinct,
it, and it's sometimes hard to put into paper. Very it's hard to explain in words, but when you've seen it, it's very clear to you how to approach that setup. But it would be 3 entry points or 6 or 9 or 10. It's all the same. It just
and the trade management, which you said, is actually the key, not the entry itself.
Correct.
I'm curious about this because am I correct in saying to have a high win rate, you would therefore probably have a high break-even rate of price coming back to your entry? Because if you just, let's say, put 10 entries in or 5 entries in and you have your target, a lot of the time it can also fail on you and reverse. Correct. But then if you're very actively entering, you can have a lot of unnecessary losses or avoidable losses. Does that mean you're using break-even quite a lot?
Yeah, a lot. Yeah, you would see also because you're averaging a lot of your trades. So sometimes if the zone is very if it's very wide, and from the top of the zone to the bottom of the top, there's a lot of room. Sometimes you take, once it goes back to the top of the zone and you don't see the reaction is happening, the price action is not there, the volatility is not there, I might just take all the top ones for break even, and I'm only profiting from the bottom ones, So only first entries are at break even. Because somewhat, it stays, market starts ranging within the range and it's not reacting as you wished. So it would be interesting to just pull the stats of the account to see those numbers.
Once you have price coming into your area, that you're ideally looking for price to come deep into your zone and then quickly react out.
Correct.
Because you're scalping or session trading. Is there certain things that you see prior to the day or during the day that would increase your chance of this happening? Fast reactions, a lot of volatility, immediate bounce, and actually coming deeper into the zone.
Yeah, so many times it comes on how weak or strong price is pulling back towards the area. Okay, so let's say you have a strong bounce that creates the initiation, the demand level, that's the area I want to be active. So if the market comes on a compression, on a weak channel towards that demand area, there tends to be a strong reaction. But if it comes down strongly, aggressively towards that area, then it might take a while for it to accumulate and then react. So if I see this weak channel coming into the strong demand area, I'm all in because I'm expecting a strong reaction because all demand, supply and demand towards that channel has been consumed.
Yes.
So that's where I take advantage of that strong reaction.
Do you believe in liquidity manipulation, whatever the term we want to use for it, but price building a support level, a double bottom, triple bottom, and then spiking lower to allow price to come higher?
Like institutional manipulation and all of that?
Maybe not necessarily the buzzwords or the conspiracy behind it. More just interested in, is this a price action signature you monitor, trade, or utilize?
Not really. And back in the day when I just started, there wasn't this terminology. The lingo has also changed. There was no ICT. There was no ICT around, not publicly at least. So I think we're all trading the same concepts and same price action. Order blocks, all of that wasn't around, So I think we're all trading the same, just with different names or terminology. Institutional manipulation and all of that, I don't think, I've spoke to institutional traders. I don't think they're, hunting our retail stops,
It's an interesting topic, which I wanted to bring onto later, but it's the idea of there might be certain price action signatures, and if we see it and use it, okay. But then when we try and explain it, that's where it can get a little bit tricky.
Correct.
Because I've had people on the show that says, the market is heavily manipulated. Others that say, no, that doesn't make any sense. I don't even know where I specifically lie on the explanation. But one thing that I find curious is the retail industry right now, the millions of traders that exist, majority of them in the last few years have moved towards prop firms.
Yep.
And therefore a lot of the activity in the market from retail traders is on prop firms now. And pretty much all or most prop firms are a B-book environment. It's a demo simulated environment. So then all of these orders that are getting manipulated, they're not in the real markets. They're in a B-book demo environment on the broker or prop firm's back end.
Correct.
So then if these orders don't exist, then they're not going to be hunted, therefore. So it does get interesting there.
But even before props, the default strategy of CFD brokers is also B-booking, not only prop firms. So, and let's not forget that it's the CFD environment, so it's just a copy of the real movements. It takes millions of dollars to move on the forex market. It takes millions of dollars to move each currency per pip, right? So it's very expensive for an institutional to move the market towards a certain area just to do the opposite. So usually what you see is trying to grab some liquidity at certain level, and a different institution maybe pushing the market to a different activity. I know from institutional forex traders, they're not even looking at retail levels or retail accounts. Maybe smaller markets, maybe the stocks one are more easily, you have penny stocks and all of that, and you have, the big hedge funds and all of that might be easier to push a stock higher. The forex market is more, it's harder for that to be happening.
At the same time, although I do agree exactly what you're saying, I do see all the time a very clear demand area on the 1 hour time frame on Euro USD. Price will come in, consolidate on the demand, come all the way to the extreme, and then during a London Open, just wick through, break the demand area, and then go bullish for the rest of the day. So you just see price wick through the demand area, 5-10 pips, and then went in that direction you wanted. What happens here, or what do you do in this case, in fact?
Yeah. What I do, I take the loss. If I had my stop losses, I take the loss, and if I see the strong reaction, then I try to rejoin. Okay. Because many times you're expecting that whipsaw to happen, but that one time that the whipsaw doesn't come and it follows through, I've been there. I've felt the pain of losing thousands of dollars, not profit capital, bias, personal capital or investors' capital, and I'm not going that way again. So I set my stop losses, and if I get stopped out and then I have the opportunity to rejoin, I will do that instead of hoping or waiting for the whipsaw, to happen.
So all of your stop losses are at the bottom of the demand area.
Correct.
So even if you see M1 breakout you could put the stop loss at the bottom of the breakout zone, at the bottom of the consolidation, but you still choose to have it in the demand area, everything at the demand.
Correct.
So therefore, your risk reward, the lower you get into the demand area, the last entries have a better risk reward.
Correct.
So then you mentioned, because you have a flexible risk reward profile, does that mean you have an equal exit for all positions, or do you scale out in a similar fashion?
No. So my exit, both stop losses and take profits tend to be the same for all the trades.
Okay.
And that's why my risk reward ratio is break even or even negative. But the fact that I don't scale out on my wins is just because that, you know, I'm sure you've been there, Walker. You know, you want to ride the trade, you bring your stop losses to break even, and then it reverses and takes you out for break even trades. And I think that's what most traders are doing, and most traders are break even or losing money. So I just prefer to bank profits, and if I need to rejoin, then I'll rejoin. But I'm taking full losses, full wins and partial losses. You know, so if I see trades going sideways, not going in that direction I want, I might be taking partial. You know, I'll be scaling out of the losing position.
That's interesting.
Okay,
Yeah.
so I'll be taking partial losses, but I'll be taking full wins.
Your average zone refined to M1, the demand area, on Euro USD, I'm guessing like 15, 20 pips is the depth of the zone.
On the Euro USD, it
Okay.
could be 20.
So therefore, because you're doing almost a one-to-one risk reward, that means after prices bounce 20 pips out of the zone, you're out of the market.
Correct.
Meaning to say, if prices, you know, let's say Asia range is consolidated right above your demand area, London Open happens on Euro USD, comes into your demand, you're laddering your entries. By the end of London session, you're probably out. Like, you're not holding a trade for hours or days.
Correct.
It's maybe even 30 minutes, 2 hours.
Correct.
It's around this duration.
Correct.
This is exactly what I'm doing, which is the reason why I'm talking through this. Because I'm a big believer in demand. Sure, it's a very powerful concept. And if you align it with the daily time frame, sure. But then there's also a lot of negatives with swing trading that I found, because I used to be swing trading too. One of them was if I was entering on an M1 time frame and I was able to have a sharp stop loss, but then my exit was on the daily time frame, I had the potential to have a huge risk reward.
Absolutely.
Which seems like a dream, but in reality, in execution, you realize you're up 1 to 10 risk reward, let's say, and you haven't taken a partial. So if your target is 1 to 15, that means you're willing to risk 10% of unrealized gain to then gain another 5%. It's a negative risk reward to hold. So then I went to the opposite end, just like you, and I thought, why not just take an exit on the average session movement? If London session on USD average is 25 pips, let me look to exit something around 25 pips, because on the best day, on the worst day, this is the average movement, and then it retraces, comes back to break even. I can get in again, or whatever the case may be. But in this case, partial. At the average London movement, I will take a partial around the 25 pip mark, because then the average daily range might be 50, 60. So I can potentially capture the rest.
Yeah.
Do you consider the average daily range alongside your session range?
No, not at all. I'm always looking at levels. So I'm not looking at ATRs. I'm not looking at average range. I'm not looking at that. I'm placing both my stop losses and my take profits are at key levels, because I know the market will fluctuate very easily from key level to key level.
Yes.
I don't want to ask the market to break those key levels in order to get to my targets, which is what happens to a lot of retail traders. Their take profit just above the key level, and they're so close, and the market reverses, and they don't understand why. I want my TP to be just below the next key level.
To be safe.
Yeah, to be safe. And then I see there's strong momentum, I'll rejoin. You know, that's for me a new opportunity to rejoin the trade. That's a new setup. But I take all my profits at the key level.
And those counter levels in a demand scenario, you're looking to buy, you got in, and now you're thinking about your exit. Is this something you're already predefined based on counter supply zones that we're building into that demand, or is it Asia high, session high, previous day high?
No, usually my exits are from the supply areas on the 5-minute chart.
That allowed you to come into the demand. Okay. And it's just a hard TP level. You're not looking for rejection or anything.
Nothing.
Okay.
Just hard.
And it's not a scale out like your entry. It's one fixed level.
Yeah.
Very, very interesting approach. I don't think I've seen someone that is doing it like this, but it does make a lot of sense. Now, the next thing I want to transition towards is the the traders you mentioned on the back end that you see, you have data of probably hundreds of thousands of traders, and you're mentioning that the most success is found with people holding trades for a little bit longer.
Correct.
And going for a positive risk reward.
Correct.
Now, this is opposite to your own beliefs and what you are doing in reality. Why do you think this difference lies between your own approach that is working for you and many traders that are profitable on your platform? What is the difference here?
I think taking trading skill to the level that you need to be a profitable long-term scalper, for the long run, it takes a lot of time, takes a lot of skill, and a lot of work. And most of the traders that are coming to the prop industry, they're not yet in that stage. And as I mentioned, it requires more management and more patience and more discipline and more screen time. So I think holding that for months in order to scale your accounts and to get into the bigger payouts and all of that, most of the traders are not there yet. So most of the traders I see successfully making payouts and getting into larger accounts are swing traders, which just requires a good signal, a good entry, and then letting the trade go in your favor.
You mentioned earlier that people maybe are break-even traders. If they were to do one account, long-term track record, they might be losing, they might be break-even. But in a specific approach with prop firms, you just simply have the ratio of your evaluation fee payouts, and you might blow an account, you might be down 10%, but it only costs you a few $100s.
Correct.
But your payouts might be thousands of dollars.
Correct.
So in your real P&L in your pocket, you're up, but your equity curve is all over the place.
Correct.
So I completely understand this game. And would you speculate that the traders that you see success in on your books that are getting the large payouts are the ones that are more skilled and therefore better swing traders that you find, or is people that are just better at the game?
I think they're better at the game. If I share with you a little bit of the risk management behind
Sure.
the company, I think that would give a lot of clarity on what happens behind the scene. As I mentioned, back in the day when there was a lot of companies and a lot of competition, the profit split was also smaller with the traders, and it was very easy to go a book with them to send all the trades to the market, and then 50-50 with the traders, and the maximum loss was smaller than today. So the risk management was simpler. Let's go that way.
Interesting. Okay. Just before you get into this, I'm very curious.
Yeah.
I thought, and a lot of people watching do think that, well, if you have, let's say 90% of traders are losing, then you just trade the opposites of what they're doing, and then you have 90% win rates.
Yeah.
Is this, and I'm just speaking to many, they're like, this is not a reality that you can actually execute upon. Why is that?
First, because the costs are very, very high. When you sending trades to the market,
In terms of volume of orders.
The LPs charge commissions and fees per volume and spreads. So usually on a lot of props, us included, we sponsor the spreads, for example. Okay, the spread in the market might be different, so that's fine as long as we take it into the business model. We're doing good. But if you want to take all your trades and do the opposite, so the trader is paying a commission, you are paying another commission. You pay twice commission. You pay twice spread. You paid the LP fee, and all those costs make just unprofitable. The whole setup unprofitable. So just taking everything and going against or doing the opposite of your trades, it doesn't work.
Interesting.
Yeah.
So previously, the A-book model was working.
Yeah.
You mentioned. How was it working back then? And now you're going on to say how it changed,
Yeah.
I guess. So what was working back then for the props to be able to A-book a lot of them?
So the programs used to be more expensive, and the overall the maximum drawdown used to be smaller.
Okay, so different economics actually.
The economics were different, and the profit split was 50%, 50%. So if a trader used to lose money, most of the drawdown was covered by the fee.
I see.
But when they used to when they money, so we used to split the profit 50-50. So we did good, and also there's the economics were different. with competition, with when new companies came into the market and the prices went down and the profit split increased in traders' favor, that brought a new challenge to the risk management of the companies, which is a good challenge for us, that made us, think out of the box and creatively.
Okay.
And we thought, doing payback would be the right call. And turns out if a company is only paybacking, the trades will also not be profitable in the long run, because you're paying the payouts. But
Right.
when a trader is not losing, you're saving that money, but you're not making any profit. But when the trader is making money, you're not making any money with him, but still you need to pay him. So you're relying only on the fees.
So if a prop firm is relying only on the evaluation fees as their only revenue source, and obviously their biggest expense will be the payouts and their team and so forth, if they were to do this in 2025, it wouldn't be a profitable model.
Yeah, it's not sustainable.
Interesting.
I mean, you may have short-term success, as the hype goes and a lot of people come, but eventually you will face those payouts and it's not sustainable. You need to.
So in pursuit of sustainability, longevity, to be able to afford with ease the payouts, what did you have to do to adapt?
Without going into too much detail, but you need to profile and you need to understand, today it is becoming a bit easier with AI and machine learning, but to as quick as possible to understand if a trader is going to make for a payout or not, just based on stats. And based on that, you decide if you A book, B book, C book, go against.
And this is on what criteria? Just their behavior in the evaluations?
Yeah.
Okay. And are you looking into other things like age, demographic, a questionnaire maybe? Is just only on performance?
Only on performance.
And just out of curiosity, swing, scalp, lower time frame, big stop loss, short news trading, all of these variables that you see, which ones have you found to be more consistent in terms of any sort of profit?
With all the machine learning, everything is changing also for us, because you let the models work for you. So you don't even have all the details of what the model is doing in order to get into
you get results, actually.
Yeah, you get the results. Before that, let's say 1 year ago, 2 years ago, we still have them, the pool accounts. And then if you have the right profile, again, with algorithms and everything, you have the profile of the traders and you have the overall book. You're not looking at an individual trader, but you have the book and you manage, the whole portfolio. So when you see the portfolios are performing good, you can leverage those. If they're performing, wrongly, then you can go against the portfolio and all of that.
For the last 2 years, a proud sponsor of the show is a top-ranked leading prop firm, Alpha Capital. And for the years that I've been working with them and the thousands and thousands of viewers, you guys, that have been working with them through the discount codes of Titans of Tomorrow, it's clear for me to see why they are a top-ranked prop firm in the industry. They have also reached a monumental milestone of $100 million in payouts. And with the multiple step plans and the multiple package types they have, there's going to be an option catered specifically for what you're looking for. So you can buy an evaluation account catered to your needs at the most competitive prices, and with our discount code TOT for Titans of Tomorrow, you're able to get the most unbeatable, unmatched prices in the industry with a leading trusted prop firm. And with that being said, let's get back to the episode. When the machine learning has identified a profitable trader that you are in this hybrid approach, A book and B booking, with the profiles you are A booking, identified by AI. Now you've got conviction in this because of the data that you have, and now you're A booking these clients. I feel like this kind of approach is probably adopted by many with brokers, with different risk teams. But the difference with broker, I want to draw this parallel, is people are trading their own money. So if someone has deposited $5,000, it's their hard-earned money. So the likelihood of consistent behavior is probably higher. Whereas with prop firms, you always have this in the back of your mind. If I paid 500, I've got a 500 payout, I'm break even. It's not my money. So you might be consistent for 1 week, 2 weeks, and then one day you wake up and you think, my max daily loss is 3,000. Why not? And then you throw it. And this is unpredictable. This is just human greed or random behavior that the machine learning no one can identify prior. But then this becomes a big issue because if you A book them and then they have consistent behavior and then one day they change their behavior,
it can lead to a damaging amount of loss.
Yeah.
How do you navigate this to still have sustainability?
You know, at the end, if it's a matter of large numbers,
Okay.
we don't analyze any specific trader, individually. It's we look at things, more from a broader perspective as a whole portfolio. So yeah, we might have a trader in a profile. We don't know the trader. We just know his trades. We're doing something with his trades, and if he changed the behavior, we might suffer from it, or we might, benefit from it. So we don't know, but we don't look at traders individually. Sure. We just have.
And in general, machine learning, it's a word I hear around, but truly I don't fully understand what it is or how it works. If you can shed some light upon what it means to be using machine learning for your risk management.
I don't think we're very, the gap between us is not very large. There's the AI team and the data team working on that. Yes. You see the models and you just see lines and lines of code just running, and you get the results from those from the codes, and then you try to build models around what the codes are telling you.
And firms that are, let's say any of the top 10 firms, would you argue they are all utilizing similar strategies? Or do you share information? Do you share and collaborate? Or is each firm has their own way?
Yeah, each firm has its own way. I don't know what's the risk management guidelines of other firms. I trust, they do whatever.
The reason I asked that is because I spoke to another prop firm owner not too long ago in New York. And he was mentioning this gamification side of it and how it's becoming an issue, because when individuals are trading with pure intentions, that's what it's there for, and that's predictable behavior, and you can adapt your risk profiles for this. Correct. But when you have organized groups that are just here to exploit the system, just like you have organized crime, you have organized people going to the casino and gaming the system. At least in the casino, you can catch the card counters and the guys with the glasses on, whatever strategies they use. Because everything is inside one room. It's inside the casino.
Correct.
But in the prop space, they might be buying on your prop, selling on another one, and playing the numbers game. But if you were all to share information, then you could catch the cheaters. But now if you're all individual components, you cannot find these cheaters. So, and I know it's on a rise. These cheaters are on a rise. What can you do to mitigate this? Or is it just cost of business? It is what it is.
It's a little bit of everything. At the Fivers, I'll give you a long answer for this, but at the Fivers, we're always aiming to get to the authentic traders. Okay, we work very, very hard to bring, the community and support for traders. And I like to believe that more genuine and authentic traders come to us. We have we do have this phenomena of organized groups. We know how to identify them, and usually they don't get into the funded accounts. Okay, we know how to spot them. We know how to identify them. We have a risk team and a dealing team and everything in place in order to spot them. Those who do get to the funded stages, as long as we understand what are they doing, we're fine with it, because we know what to do with their trading. The problem comes when, as you said, okay, he's doing something consistently, and then one morning he wakes up and he does something very different. So we do fight this phenomena of gamers or organized group and all of that. That's our, sadly, our large, a large part of our operation goes towards that. And I think we're doing good on, spotting them and stopping them before they go into the funded stages.
So because your firm is one of the first firms, 2016, when it was initially founded, there was only maybe FTMO and maybe a couple others, I don't know.
Correct.
But in your time, especially around 2020 COVID, that's when like every mother and a dog and everyone had a prop firm, and the rise of influencer props. I want to understand, is there anything for us to learn or observe from your experience of, I want to call them real prop firms versus influencer-owned prop firms, where you're sitting with a team and a risk team and you have a full infrastructure, whereas these guys have just some followers online and maybe a tech provider partner. What difference have you seen in longevity, infrastructure, and general business practices?
I think for traders, if I was a trader just coming into the industry, I would feel overwhelmed of the amount of offer out there, of the choice, amount of prop firms out there, the amount of content, the amount of everything. And it's very difficult to choose which prop firm to work with. I think traders need to, they need to get very informed on which prop firms to work with. I don't know many of the prop firm managers or founders, and I want to believe they come with the right intentions into the game, into the industry, because at the end of the day, what we're trying to accomplish here is what we talk about at the beginning of the conversation. We want to help traders overcome the big challenges of being a trader, which is lack of capital, psychology, pressure, lack of community, lack of information, lack of education, all of that. So we work very, very hard with that. So I think if as a trader, you see a company with the right values, which is investing in you as a trader, they might have aligned interest with you as a trader. The traders back in the day, I don't see them a lot today, but back in the day before the technology providers came, there was a lot of attempts to just do a lot of marketing around the trades. And I think kind of damaged the reputation of a lot of the industry as a whole. They brought prices down. They make everything more gamey, and the risk management challenges around it. But if you go to larger companies, well-known, high reputation, I think you're in good hands.
Yeah, the reason I draw the comparison is because as quick as these influencer ones came, they very quickly disappeared too. And with that, a lot of upset customers and traders. When we are to compare just overall infrastructure, I can see that most people, I want to say, come in with good intentions. There are the bad actors like anywhere, but majority, even the ones that failed their prop firm, they came in with good intentions, but it's just a hard business model, or it's harder than they thought before they started, which is a reality I'm sure you're aware of, because you've had every high and low in the industry, because you've been navigating for many years, almost a decade now, actually. Next year will be 10 years.
10 years.
So with that much time in the game, what have you seen as certain things that you had to do to see how others are? It's a price war to the bottom. It's a gamey, the better the conditions of the trader. But in the end, it's harder to be a sustainable business model. And the reason I say this is because maybe 20 or 30% of the guests I've had on the show, they speak bad on prop firms. And I'm a big fan of prop firms. I think they're a great tool. And yes, there's denied payouts. Yes, there's people that got scammed, rug pulled. There is these bad things that happened. I'm not denying that. But at the same time, there is people that are 18 years old, living at home, 1 year into their trading, made $30,000, life-changing money. So there is wins and there is losses in this space. But overall, I think it's a net positive. But when I speak to these guys that are like, prop firms, no, don't do it, it's because they're looking at the pockets of the bad ones. But then if you look at the pockets of the good ones, the top 5 that have been around for many years, it is a different case. For someone that is watching or follows influencers that says, no, prop firms are bad, avoid them, just focus on your own money like the people used to do, what would you say to them? Of like, why is prop firm still worthwhile?
Yeah, I remember a lot of videos done around the fivers, why you shouldn't trade with the fivers. It's better for you to trade your own capital. We used to offer low leverage, and we still promote low leverage than high leverage. It's amazing to see how low leverage traders live longer than high leverage traders. Okay. That's a different conversation. But they used to say, okay, take your money, take it into an offshore broker, trade with 1 to 500 leverage, you will make more money than trading with the fivers with low leverage. Okay, that was kind of the point. Okay. I think trading with a prop firm like the fivers or any of the big ones will give you we solve one of the large pains of traders, which I remember myself, which is that, okay, do I withdraw profit or do I grow my account? Okay, because you have the leverage, you have the account, you grow your account by 10%, and now what? Okay, what do you do with that? You keep scaling it, you withdraw your profits, and then you're back to your initial balance. So prop firms, they solve this. At the fivers, every time you reach a milestone, we scale up your account. So let's say you start with a 10K account, you make 10%, we scale your account to 15K account, regardless of you withdrawing your profit. So you can withdraw profits and scale your account, which is not something you can do with your own account, right? So even if it's going to take longer because you have reduced leverage than the 1 to 500 or 1,000 you can get on an offshore broker, it's worth, that scale of accounts and withdrawing, that's something you cannot do on your own capital. So that would be my argument for that.
The next one I want to get into is kind of, this might be a tough question, but I'll ask it because a lot of people will want to know, is just the overall conflict of interest side of things. Not especially your firm. I think every firm has this dilemma where I think back in 2016, people were not so aware. In 2025, I think every prop trader knows that the evaluations pay for other people's payouts. It's a business model. My stance is it's absolutely fine. I want the prop firms to thrive as a business because then they can afford the payouts. And you don't want prop firms struggling because that's when the denied payouts and the problems come. So if the prop firm is winning, the winning traders are winning, everyone's happy. And the people that are blowing money on these evaluations, they need to reconsider their choices. If you haven't found consistency, don't blow your money. That's individual responsibility. But at the same time, a lot of firms, they will now do predatory practices or slippage or other things that are only there to cause traders to struggle, and that becomes the benefits for the firm, but then to the detriment of the trader, because there is a underlying conflict of interest. I can look in this and say, well, brokers do the same, where the winners are paid out by the losers, in the sense of your deposits pay the payouts on brokers. Even when you zoom out and look at the whole market, you can say, well, there's no money created in the market. It goes from winners to losers. So the zero-sum prop firms, zero-sum brokers, zero-sum markets, I understand that's how the world operates. But the predatory practices and the conflict of interest brings an ethical conversation here. So I wanted to hear your thoughts on this.
Yeah, I think for everyone who've traded with the fibers, we're always trying to give traders the best trading conditions. I told you, we sometimes we sponsor the spreads. You will get it. You'll trade with us major pairs with zero spreads. That's not real market conditions, right? That we get from our LPs a certain spread, and we mark up down, okay? Because we want for traders to have a better position. So even if when we're going out to the market on real accounts, we might be losing on the spreads. We absorb that loss, but the macroeconomics, they're still in place. So we never go, I don't think we have a certain thing that goes against our traders, okay? Our interests with the traders are aligned. We don't have any conflict with interest. I told you, we don't look at traders individually. So as long as it's not something that we cannot replicate in the market, so there might come traders with EAs that we cannot really make money on the market with those, or emulators, or rollover scalpers, or spread scalpers, or we cannot make money with that. But as long as the traders are authentic, speculative traders, and we know how to manage that in the market, whatever risk management we need to apply, I think our interests with them are aligned. We don't have any predatory practice. We don't have a slippage and all of that. We don't need any of that.
The next topic is more future orientated and is surrounding this word regulation. Now, I think it's a very misunderstood term, and it has a lot of depth to it, where is what jurisdiction, there's a lot of things that come here. And even the broker industry, which is much more mature, you have the Seychelles and the offshore brokerages, but then you have the regulated ones with less leverage and harder conditions. So people still pick the unregulated option, despite regulated options being there. But I want to draw a parallel, because this is from your time. The MyForex funds, the rise and fall, let's say. I actually didn't keep in touch with what happened to that case in the end. In the beginning, I did. But just generally how you viewed that situation, how you learned from it to put maybe measures in place, and just your general stance on what do you think the industry is going to happen in the next 5 to 10 years with the regulation?
Yeah, I like this topic because we are in conversations with the regulators. We have actively approached them and asked them and request from them a regulation to the industry, because I think it's something necessary. It's something that traders and companies will benefit from, a regulation in place.
Which jurisdictions or which regulator?
SISEC, for example.
Okay.
we've met them. We're in email communication with them. From what I understand from regulators, they are very focused on other topics, crypto and other things they need
bigger
to.
markets.
Yeah, bigger markets they still need to regulate. They don't fully understand the nuances of the prop firm industry.
Interesting.
And I think once they bring a regulation would be similar to a bank regulation. I'll go into detail with this.
Okay.
When we asked them before that, when we requested from them regulation, they were not willing to regulate us just because there's no retail capital in the game. So what SciSec does and you know the regulators, the forex regulators do is to protect the traders, the retail traders.
So they don't see this as trading activity because there's no deposit into an account. And how do they view therefore the evaluation fee, which could be seen as a deposit if there is instant funding? Maybe I don't know.
They're not seeing it. They don't see it that way. So when you see SciSec, they're fine with brokers doing a B-book, for example, as long as they pay. So what they request from brokers is not bad practices, no slippage, no all of that, and to have a certain amount of money, in their accounts in place all the time to be liquid and all of that. And I think for the prop firms, once they decide to regulate, they'll request something similar to not bad practices and maybe limiting the leverage you can offer, no more 1 to 100. Maybe you need to go down to 1 to 30, something like that, and to have money in their accounts when there's disputes, when there's things to solve. But we haven't heard back from them saying, okay, we're going to regulate this.
So with these things in mind, what was the issue from a regulatory perspective with MFF, my forex funds?
From my understanding, what I remember is that MFF, they used to, they also ran a unregulated broker.
Okay.
And that what triggered the whole case to initiate. I think I didn't follow, same as you, I didn't follow what happened afterwards, but I think afterwards, everything that was not related to the unregulated broker was dismissed. I don't think they go into the prop firm side of MFF.
Okay. Yeah, from what I gathered, it was kind of not looking into the tech or the industry. It was more looking into a few things that they're doing that could be seen as fraud, maybe.
Yeah.
I don't know. Or bad practices as an issue. Moving into, let's say you're saying the regulators move slow and they have bigger priorities like crypto, which are much larger markets. Mm-hmm. Therefore, what timeline would you imagine any change to happen in this space?
I hope it happened today. We are offered to them to be part of their process of creating regulation if they need to understand the industry from the inside, to help them understand the industry from the inside in order to set the right regulation, who's not going to destroy the industry, but to help it grow healthier. We haven't heard back from them. They haven't thrown any light of
interesting. Okay.
Okay, are we going to do this? I have no clue, but I hope it happens soon.
With regards to other large prop firms, I want to speak about the large ones because I see them as they've stood the test of time. They're more reliable. They have better practices, infrastructure, and so forth. The ones that are, let's say, top 10, I see a lot of them. They post like, we did 50 million in payouts, 100 million in payouts, and just from what you see behind the scenes, is this something realistic? Because I think anyone can claim anything, but there is no way to prove it because it's not any. Some of them will be through crypto. And I spoke to Justin from FBFX. He said, on a first glance, it makes sense. But then when you look deeper, they can just move money through a wallet and bounce it to their own accounts. And it looks like payouts, but it's just staying in-house just to inflate numbers. So there's going to be tricks and marketing and all of this. But what are like realistic numbers of any big prop firm?
I think within the top 10, there's a large scale and a large difference in sizes. I think number 10 is very, very far from number 1.
Okay.
I believe so. There's certainly I can tell you from the fibers, we do get into the millions of payouts every month. So if there's someone, the largest, the large company saying, okay, we pay 10 million, 20 million, 30 million a year, it's credible.
Wow.
If you hear, small companies, even the, number 10 or 9 or below that claiming the same, I don't think, I have no way to prove that, but I don't think those are the numbers. I do know there's some practices of moving the money around to try to make inflate the numbers. But yeah, I don't think those are.
I've also come across two things lately in the last year, which is one is people coming out and saying our funds are real funds, completely A-book environments, and it's not like it's to say your 100K account is $100,000 of real capital, and all you have to go through is phase 1, phase 2. When I see this, it seems pretty like, okay, but majority of traders lose. So why would you give a trader that you just assessed for maybe 3 weeks, give them $100,000, and yes, it's only 10% risk, so it's only $10,000 of exposure, but they paid 500. So you have an issue here, and you A-book everyone. Is this something that causes alarm bells, or it's realistic?
It doesn't work that way. At least not in the fibers, because if I have traders with 100K account, doesn't mean I need in my pool account to have 100,000 time each one of the traders train that. I only need to have the enough capital there with the leverage to allow them to trade whatever they need to be able to trade.
The margin, yes.
Okay. Yeah, is that clear enough? So, and our pool accounts, they have larger leverage than the leverage we're giving them. So they might have 1 to 30, 1 to 100 leverage on their account, and they have, let's say, a $10,000 drawdown to manage. Our pool accounts have larger level. Those are institutional accounts, and they have larger leverage. So we don't have to have. Those are large accounts, right? But it's not 100,000 times each trader. It's just
because it becomes hundreds of millions very quick.
Correct.
It's not realistic.
It's not the case. It's only enough to allow them to trade whatever they're supposed to be able to trade.
I finally have a special offer to share with all of you from the US or my futures traders, which is over 20% of the listeners of the show. And that is Alpha Futures, a leading futures prop firm that is working with Trader8 and NinjaTrader that are compliant with CME regulations. With the largest end of day balance drawdown in the industry, a 90% profit split and same day payout. And with the most competitive pricing in the industry, with accounts starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So why not get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and larger capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry to make this a home run offer if you are a futures trader.
Yeah, I saw it more as buzzwords. People like this idea of like real funds, and I think some firms ran with it. The other one that I've seen the rise of is instant funding.
Yeah.
Now, I think it's also a beautiful tool as well, if it's done in a certain way, because a trader who is passing phase 1, phase 2, they made 15% potentially around this area, but they didn't get paid for it, and then they have to go and get paid.
Correct.
So you can call it a valuation. I think that's a very understood model. But some people might want to pay to skip the process and get instant funding. But then you can also enter into dangerous territory in terms of risk and the back end. I want to hear if you have any ideas on how that would work. And second is, would this cause any regulatory issues? Because a few prop firms I spoke to, they said, we would want to get into the instant funding space because it's an attractive offer, but it looks too close to a deposit in a broker to have access to larger leverage, and you just worded a difference, and that triggers into a broker space.
Correct. So that's the key. If you want to offer instant funding, you need to make sure that the cost of the account covers most of the drawdown you're willing to offer. And then it's similar to our very first model, which we used to do 50% split with the traders, the one-step program. But that, on regulators' perspective, would be considered a deposit. And just to avoid going that direction, we haven't implemented that model. But I think our main concern would be that, like, to be perceived as a deposit on a brokerage account or so. But I think the risk is manageable as long as the payment for the account
is high
covers the
enough.
cost.
Yeah.
Yeah.
And probably lower leverage as well.
Correct.
To be sustainable.
Yeah.
Moving into, just say, the last 10 years or 9 years in the prop space has been so volatile, so many
Yep.
changes in conditions, prices, participants, even the traders' behavior. And I think a very pivotal year was the year the MT4 crisis kind of happened. What do you see the space going in the next few years in terms of, will you see more people coming, or will you see the price war reaching a floor now and then only the biggest surviving? How do you see the space navigating?
Yeah, I've seen the last years the industry kind of self-regulating itself. I think
What do you mean by that?
by traders not falling into marketing.
The consumer is smarter now.
Yeah,
Yes.
the consumer is smarter. They understand that if a company is offering 50% discounts every time, there's something fishy here, that is not sustainable. So the traders are smarter consumers today, and I think companies the same. Companies, even large companies, that they started with very low prices. You've seen them increasing prices just to come to sustainable levels. So I think companies are aware of what's the bottom of the price they can offer. Traders are not, are willing to pay higher to make sure they're going to get paid. They get into a reputable company and not going to a company that just started, even if it's cheaper. So I think that balance within traders' understanding of the industry and companies' understanding of the industry and the risk management behind, it's kind of setting the levels of what's sustainable. I don't know how many more companies can come and make it and stay sustainable, but I think in a couple of years we're gonna see this 50 companies or 20 companies that make it and that lead the industry. And I'm sure the fibers will be there.
I gather, and you can correct me if I'm wrong, but the advantage the biggest firms have is the new influencer ones, the backing financially they have is whatever they have in their pockets, or that they're willing to use. So if you have a drop in revenue, you can still withhold payouts. But I imagine the top 5 firms, they're sitting on millions of dollars or months and months worth of payouts just in reserves. So even if you have a bad month or an issue, like happened with the MT4 situation, it's not a crisis. You are prepared. Would that be something true?
It's not only that, it's the fact that you have your own team, you have the data, you can, you spoke with you know the industry, so there's technology providers. So it's very easy for someone to buy this technology and start your company. But then you don't have the flexibility or the ways to develop what you need in order to manage risk. So in our case, on large companies that have their own technology, you can develop, like we mentioned, the machine learning systems, the model, the risk management behind, the compliance behind, everything behind. And all that operation helps you not rely that strongly on your savings or whatever it is. You know how to manage and how to manage the risk management behind changes. So I think it's something that's not doable. It's a lot of effort and a lot of investment in servers and AI technology and the languages, and it's very expensive. So having that sources and that technology in-house allows you to do that and not relying on someone else's technology.
The ending portion of the conversation, I wanna bring into it just makes me laugh bringing it up. But you mentioned earlier ICT.
Yeah.
Now, the reason I want to bring this up to yourself is you've seen the trading activity of many, and I'm sure many of those are ICT SMC traders. I think in your time in the space, you've seen an industry with no SMC, and then everyone's doing SMC.
Yeah.
And although there is merit to the strategy and the approach, more importantly, there is certain figures in the industry that have made huge success with these strategies.
Yeah.
So then you see the headline of $1 million payouts, and I've spoken to a lot of these guys, and they are amazing guys. But I also know law of large numbers and anomalies do not define the rule. So I want to hear your thoughts on the behaviors of these kind of traders compared to the certain traders you've mentioned that are consistently getting payouts. A lot of the viewers are going to be in this category of SMC, ICT traders. Are they a carrot on a stick, kind of chasing a high, or is this something that can really work on mass scale?
To be honest, I don't know who in the fibers is trading SMC or ICT. I don't know what they're doing. Okay, we just look at the trades and we just look at the book, and we're not so concerned if they doing certain strategy or another strategy. So it's hard for me to spot, okay, if SMC traders are performing better than other traders, because I don't know what they're doing. I don't know if they're doing that strategy or not. We just see the positions. We see if we can match it with something.
Sure. What about general behavior? So you mentioned trade duration is more favorable for the profitable traders, is a longer hold time.
Yeah.
What other patterns would you say in terms of trade frequency, risk strategies, high risk, low risk? You could also have stop loss size in average. Asset classes chosen, trade many things, just trade two things. What other behaviors have you seen in the profitable?
That's a great question, and it's that's very clear to spot and to see and to explain, because we have a very powerful program in the fibers, a scaling plan. Okay, every time you hit a milestone, we scale up your account, and we have one of those scaling programs which we double your account each time. So. Which is very powerful. You know, traders who commit to long term and hit 10% a couple of times, they're very quickly managing $300K, $500K, $800K, $1 million. And there's only a few. It's like a pyramid, right? A lot of traders are in the base of that, and a very few and fewer advance to those higher levels of funding. And that's where you see the patterns of those traders. And you can see most of them use stop losses, and they deal with those losses. Most of them are not scalping, as we mentioned. They're trading fewer trades and letting their trades run. And if you interview them, because we tend to interview the successful traders, the same kind of conversation we had at the beginning, when you understand the in and outs and the small print of the strategy, that level of understanding,
detail, yes.
You can have them with them, so you understand they're sophisticated traders. They know their strategy, they know when to perform, when not to trade, and they're trading low leverage. So even if they have that access to 1 to 100 leverage, surprisingly they're not even close to that. Okay, they're trading 1 to 10, 1 to 20 leverage. So just another side story, and I'll come back to this. There's some traders which just when they end the evaluation stages, we're not sure what to do with them, okay? And we ask them for a couple of weeks to trade with lower leverage, and then we release them. But just to understand their behavior, we ask them to perform with lower leverage. So we adjust their leverage to a smaller leverage. And those traders live longer, make more money, make more payouts. So those higher level traders are also trading with low leverage, because they understand that they need to leave another day to trade.
Yes.
So they don't let those losses to be more than 1%, more than 2%, let's say. And in order to risk that 1%, you don't need that much leverage, right? You just need 1 to 10, 1 to 15, 1 to 20, probably. That's all you need.
With these interviews of the successful traders that you have you noticed any personality, psychology, beliefs in the markets that have showcased this as a common denominator amongst the successful?
I think it's just the approach to risk management, the respect on risk management, and the mastering of what they're doing. Okay, they long ago stopped chasing strategies, because that's the strategy hopping is a very when you're just starting, you go from strategy to strategy. At some point, these traders and yourself, myself, you just stop, you stick to something that makes sense to you, and you tune it into your situation and you master it. So these traders master one thing, one strategy, and that's what makes them successful.
And when you look at the data or behavior of the thousands of losing traders, is there something that stands out and says, okay, if traders are just to correct this one thing, this would eliminate a lot of losses? Is there anything that jumps out like this?
Leverage. When we, I think it was 2021, we used to have an account with low leverage, like 1 to 6, and
Okay.
you know, it's perceived as low, very low leverage, and there was this demand for higher leverage. We want higher leverage, and we opened the same account with the same program with I think it was 1 to 30 or 1 to 50 leverage, and a lot of people went there, and you could see traders in the 1 to 6 leverage performing better than the 1 to 30 leverage. So
Why do you
traders,
think that is? Is just adjusting to the larger numbers.
because I think traders, and I've been there, you know, when you take the loss, you take the full loss. And if you take in high leverage, you take a large loss. But when you have a win run in your favor, they tend to cut it earlier.
It's true.
So they take in very large losses, and the leverage allows you to take very large losses. So if you stick into low leverage and you take in small losses, you live longer in order to you know, to recover, to get out of the drawdown, and to make profit, you know, the next session or the next day. And surprisingly, we saw these traders from the high risk program they really wanted going back into the low risk program and performing better there. So today, when I see a lot of traders not performing well or losing accounts, it's just because they train very, very heavily, or they train a lot. They're like they're doing they over leveraging the accounts.
So have you found any pattern of the people that tend to lose quickly? Or, you know, like people that get through phase 1, phase 2, but you just know that these are likely to not even get a payout, to blow the funded accounts. Is there any behaviors there, or any patterns? Like, do people tend to go more towards the minus 10% and overall lose the account? Or is it the max daily loss? They just have a bad moment and mess it up in one day. Is there anything as such?
There's a funny pattern you can see when traders are going into drawdown and they just take a very large trade, and
Risk-wise or
risk-wise.
Okay.
And then that will take them or to the daily loss or maximum loss, or will take them out of the account. And you see the same when they're getting closer to the take profit. So when they're going into profit and they're, let's say, 2% far from take profit, they also take a large trades.
And they want it quick.
And that's a mistake, because you just need 2% more, and they risk a lot and they go down. So when traders get consistent with something, with the lot size, with the risk they take, you see them performing better and eventually, you know, getting payouts.
Makes sense.
When you see traders increasing leverage, reducing leverage, increasing leverage, reducing leverage, they don't get that skill of consistency, and then it's hard to tell if they're going to make a payout or they're going to lose it, right?
For me, that screams like dopamine chasing, gamblers kind of approach, as opposed to a systematic one. I want to end by just giving you the opportunity to either something that I didn't ask that I should have asked, or something that you maybe wanted to share coming onto the show today.
I think if we look at the fibers and if we look at the industry, I think prop firms have a responsibility to creating better traders, okay? And if the interest of the companies is to have, you know, the 5% of traders that make it constantly to and profitable to manage large amount of sizes, this should be in the interest of the companies also to help traders become better. And I think that's something we see companies doing, and it's something we pursue a lot. And creating this whole ecosystem of services, of education, of community, of risk management resources, in order to help traders develop the skill of trading and risk management. And I think if more companies do the same, we'll eventually create better traders, and that will help also companies to deal with risk management and traders' behavior. So yeah, that's a message and the flag we've been, you know, carrying for years, and that's our, you know, core principles, our core values of creating for the traders the whole ecosystem, and not only having this relationship of customer and company, but as a partner and as a trader and as a, you know, this common interest relationship with the traders and the companies.
Man, a beautiful episode. I really enjoyed it. I think we covered so many topics, and it was a lot of fun. So I just want to say thank you. Thank you for coming. Thank you for flying in.
Thanks for the invitation.
Episode. Boom. There we go.
verified as one of the best traders in the world because of his rankings in the Robbins World Cup Championship.
Trying to take a falling knife. Maybe 1 time out of 10 you take it, but there is a huge probability that while you try, you get cut. I don't try to take the lowest low and run because the probability is really low. I just try to join the market at the correct moment. I want to be in the direction of the pressure.
Introducing Fabio Valentini, a world champion and internationally recognized scalper in the futures markets, with hundreds of executions per month and verified track record of 100 to 200% in a single quarter in the competitive environment of a World Cup Championship.
Participating in the World Cup, I refined my process and I understood that the best way to get a really impressive performance, keeping the drawdown low, is to start with you took a long, it's already 1 to 3 risk to reward. You can decide to close or to keep the position. And you know that the probability that you will reach the third standard deviation is 7%. So in 100 sessions, only 7 sessions need to reach the third standard deviation. Will you keep the trade open or will you take the profit? Before everything, you need to have a trading model and you don't need to go out of the trading model, because the only times I went out of the trading model, it was always lost, stop.
I'm interested to hear now, because you kind of touched on 2 areas. One, which is the initial reactions of the market, a cause and effect relationship of volume and price. And then you also have statistical data on your side. What do you more believe in, of just data, a large sample size tendencies, or real movements you are seeing in the day based on volume and price?
This is a really interesting question. And
well, ladies and gents, we have a trader who is wearing a Whoop band. So I need to know the stats behind it, because on certain days, 30 trades in a day. We have a champion scalper, and if I'm not mistaken, you've ranked 3 times in the Robbins World Cup in the scalping division, and come second a few times and also third place. So phenomenal stuff. And I want to start off with just asking directly, how many trades do you take in an average week? Or in the World Cup, how many trades have you taken?
So in the World Cup, there is an average of 500 trades every 3 months, because it's a quarterly cup. So in one cup it was like 350, the other one was 600, the other one was 550. So around 500 trades per cup. And I think it's the only way to keep the drawdown low and get a big performance, because you need a big data sample and a lot of execution. Otherwise you can just go hard on risk, but it's like gambling, because you need 5 lucky trades. And it's not my approach. So I prefer to, if I'm joining the competition, I'm scalping every afternoon from the starting of New York session to late night in United Arab Emirates.
Okay.
And there is another guy on the other side of the planet in Malaysia, that is Nazri Khan, that is my main competitor. Also, he did 223% and he's scalping in the exact same way I do, footprint scalping.
Okay. What was your performance in the World Cup?
Now, if I'm not mistaken, it was 68% in the first cup, 88 or 89% in the second one, and 218% in the third one.
Okay, but so I'm going to guess and say the year you did 200 was because of the exponential days approach you have.
Yes, so participating in the World Cup, I refined my process as I improved also as a trader. And I understood that the best way to get a really impressive performance, keeping the drawdown low, is to start with low risk and compounding the account and using, for example, the profit that you made in the first 2 hours or 3 hours of the session to make additional profit. So let's say that I start one day with 3 take profit. I risk 0.25% and I take, for example, 1 to 4 risk to reward. So at the end of the first 2 hours, I have 3 targets and I am 1%, 1% and 1%. So I have a total of 3% on the account. I'm taking 2% on the side and I'm opening 2 trades with 0.5%. So it's increasing. Why? Because I noticed that my profit is concentrated in very few sessions. So the big amount of profit I do is when Nasdaq rally and I join the trend in the correct moment. And when the strategy is not working, because maybe you are in consolidation, it's better to don't trade. So I take maximum 3 stop loss per day and I'm done for the day. If I have a streak of 3 stop loss, it means that it's not the environment to use my strategy.
Okay. So I guess the scaling risk, where you're just leveraging profit of the day, is a sensible way, because on certain days, at the start of the day, you don't know how many trades you will take. But on some days, it might be 1 or 2. Another day, it might be 30. So you're protecting yourself, where your worst case scenario is you're back to where you started the day.
Yeah.
why would you take an approach of what is the risk per trade when you are doing
0.25%.
That's how you start the day.
How I start in the beginning of the cup. As for example, let's say that I reach 50%, but it's not enough. It's a huge performance in 3 months, 50%,
Right.
but it's not enough to be in the podium. So I just start to raise my risk. So
At the start of the day.
At the start of the month,
Okay.
of the first month of the competition. And in the same time, I'm not starting immediately to raise the risk. Like, let's say, in the first month, I have 50% profit. In the second month, I start from 0.25%, I raise to 0.35% or 0.40%. But if I get a good day, 1 to 4, 1 to 3, 1 to 5, multiple trades per day, maybe I sit at 5% profit for the day. So I take half of it and I risk in through 2 or 3 trades. And if I'm risking, for example, let's say 2.5%, 2% on one trade, and I get a 1 to 5, it's 10% on the account.
Right.
But this 10% is compounding with the additional 50% of profit. So it's way more. This way I keep my drawdown really low, but low, I mean below 20%. But to achieve 218% in 3 months, it's more than 1 to 10 risk to return in the concept of risk. So it's really big.
Do you think many traders in the World Cup or in general, like someone who's just looking to make profit in their life, should modify an approach like this? Or because I've had a lot of traders that just do 5% risk per trade, or they'll have an A+ setup and they have more conviction, and then they will scale into that with more risk at the beginning as opposed to compounding a day.
Yeah, this depends on the number of execution that you have. For example, let's say that I have a trading model that is only giving me 10 trades every 3 months. The only way I have to make a good amount of profit is to raise the risk. I don't have this problem because I have a lot of execution. I have a huge amount of stress, but also a lot of execution. So, but yes, maybe you are a swing trader, or maybe you are intraday trader. Intraday traders maybe have 1 setup per day, 2 setup per day, and some days or some weeks 0 setup. The only way you have to win the competition and to compete against scalper is to increase the risk per trade. Yes.
No, it makes sense. If you want to increase your rate of return, you either increase, and you have a fixed edge, and you know that this edge over 50 trades, it gives me this result. It's to take more trades or take more risk.
Yeah, there is no other way around it.
Yeah. When it comes to, because this is a question I asked outside, but I think it's good for the podcast, which is if you are trading M1 time frame, 15-second time frame, and you're really involved in just intra-session movements and reactions, why not find a reaction early in the day and ride the wave of the day? Why is this get in, get out approach, or a trailing stop kind of approach?
This is a really interesting question, and I was trading like this 3 years ago. Then I did a statistical analysis on the MAA, that is maximum adverse excursion on price, and this is the number of days during the month that you have really big explosive moves.
Okay.
And it's not so big in percentage. So I just want to compound smaller profit, but every day, instead of taking the home run, 1 to 10, 1 to 15. This is another thing that I think it's a misconception in the trading field. People think that 1 to 1 and 1 to 2 risk to reward are really bad. They just want to shoot for 1 to 30, 1 to 40, 1 to 30. Maybe you will get it.
More pain first. More pain first. Careful, careful. What do we think, chat? Up or down from here? Up or down? Up or down? PW, that dollar cost trade short would never work with a prop. Who dollar cost trade with the what? What you talking about, Willis? What are you talking about? Wow. Well, there's the pump. Wow. Guys, that's almost 100. Look at that. I got stopped out at 890s. Look at that back up now. Wow. Wow. That ain't bad. That ain't bad, chat. That ain't bad. Look at it. Right back up into the middle of the range. This is what I was playing into, this idea that we're gonna range here and push back up. You can see very clearly, right? Very clearly, look at the 5-minute chart. You had this big dump candle. Realistically, you're gonna get that push back up into the middle of that candle. So right now, that's 100 points off of those lows. So I just wanna ask the people in the chat that said that I'm a terrible day trader. So it seemed to have worked. Hey, I do want to point out at least I wasn't getting short. You know, like at least I wasn't getting short down there at the lows and telling the chat to get short. You got to give me at least that credit, right? Like maybe I was fighting the trend. Maybe, you know, it wasn't the best long, but at least I wasn't telling the chat it was a short at the bottom. So someone said, you just add in until it works out. Hey, bro, whatever you got to say, man, whatever you got to say. Whatever makes you happy. Remember, again, you're watching me live on YouTube, guys. Like, no one's telling you to, like, it's crazy. Like, it's the weirdest thing to me that people have free will and they still choose to watch me live and then talk shit. It's just like, you don't have to. You can, you know, you can go anywhere else. All right, kind of like holding up here for a push back up, possibly. The Dow absolutely getting destroyed right now. Are you guys looking? Look at the Dow. What the fuck? Dude, the Dow is bleeding right now. Is anybody seeing that? Big dump on the Dow right now. Big dump. Big dump on the Dow. Nasdaq holding up here. I would have to think the Nasdaq's going to turn down. Look at this. This is the Dow chart. Straight down on the Dow right now. Straight down. Look at that thing. Straight down. We got Bitcoin selling off as well. Uh-oh. Daddy. What am I going to do, chat? Richard Stan says, then call the short. You call the short, Richard. You get short, Richard. Some of the chat said, get short. You go short. Okay, I'm gonna go short. Let's see. Try to add, ooh. Wanted to add maybe up on this little push back up, but if not, we'll just ride it. I'll add if we break this low again. And then try to go for a new lows, 860s or more. You're shorting at the VWAP? I'm sure we're below the VWAP, sir. We're below it right now. So technically this is the spot to short. Technically, you know, technically. You can see technically we are below the VWAP right here. We pushed up, got stuck in the middle of the range, and we'll see if we start to pull back here. So the chop is real, man. The chop is very real. The ES is tanking. The Dow's tanking. Nasdaq's not. Something is up. Looks like Nvidia kind of holding up right now. Nvidia's holding the market up. Nvidia is holding this market up right now. Everything else, the Dow is selling, the ES is selling. As soon as Nvidia starts to sell off here, I think the Nasdaq's gonna absolutely get crushed. If we break 900, I'm gonna add to the short. That kind of like plays out with the big bear flag there, kind of, right? This is like a bear flag there. We got the D-Money show coming up here once I close this trade out. Either a winner or a loser. We're going to find out. We got a little bit of numbers coming out here at 10 o'clock. Oh, God. Another pump. Looks like, yeah, Nvidia again pumping. Nvidia trying to pump. This just looks like ugh. I'm honestly impressed right now that the Nasdaq is holding up. I mean, I don't know if that means that the Nasdaq's gonna make the ES reverse or vice versa, but I don't think this is gonna hold. I truly don't think this is gonna hold here. Right? Like I don't think it's gonna hold. What do you think, chat? I want to see some aggressive selling through this 900 level. Yeah, Nvidia just kind of holding over there. I'm looking to add into this short if we start to sell. I want to get basically through all this and then add into it and just ride it down to make a new low, possibly. We're in the middle of the 15-minute range here. Everything is lining up good for a short through this 900 level down there to make new lows. So let's get it. Let's get it. Double top on Nvidia, possibly. Possibly. Come on. Teasing with me right now. You're teasing with me, Nasdaq. Teasing me. You're teasing me. It's teasing. Teasing, teasing, teasing. Someone said go long, it's gonna go up. Don't say that. Don't say that, chat. Please pray for me to go down. Come on, break through the 900s here. Break the 900s. We got a little bit of news coming out here in 30 seconds. 30 seconds till this news comes out. I'm going to add right there, try to break through this 900. Didn't break it there. Perfect. Is what it is. It is what it is. News in 5 seconds. Factory orders coming out here. 5 seconds. Come on. Let's get it down through the 900s. All right, come. Don't. No. Don't do that. I hate when it does this shit, man. Now it's just gonna fucking chop around. God damn it. The Dow and the ES made new lows already, chat. The Dow and the ES already made new lows. What in the fuck is the Nasdaq doing right now? I don't get it. I don't get it. The Dow is absolutely cratering. The ES made new lows. The Nasdaq stuck here. Motherfuckers. This shit is rigged. Straight back up now. Stupid. I'm adding into this. I don't believe it. I don't believe it, chat. Something is wrong. Something's broken. Somebody broke the market. I'm breaking it. We're gonna break it. Now it's gonna pump like crazy here now. This fucking chop, man. The market makers are watching my streams. I think as long as we stay below this 960, 970 level, we're good for the shorts. But who knows? We're gonna swap over here to D-Money as soon as I close this trade out. I'm gonna see if I can get some selling pressure through here now. Danny Ray said unlimited funds. You can dollar cost average all day. I mean, it don't really work like that, Danny, but okay. Whatever you say, bro. All good. All good, brother. It doesn't offend me. Thank you for acknowledging that I'm rich. Oh, my Lord. Let's go, chat. Come on. Come on, chat. Let's go, baby. Get me through that 900 again. Daddy's gonna win this one. I know. I got a feeling. Oh, God. Oh, God. Oh, God. If this don't dump, I swear to God, I'll delete my YouTube channel forever. It dumped. Never mind. Don't have to worry about it. It went back down. Oh, God. This is the stupidest fucking chop zone. Stupidest chop zone here, boys. Dude, the Dow is selling. The ES is selling, guys. Everything is selling. Everything is selling. And then we're out for $10,000. Hey, everybody can suck my dick. I'm just kidding. I love you. Where are the haters at now? Where are the haters at now? I'm so pumped up. I'm going to open a Pokemon pack. Where are the haters at now? Where are the haters at now? Where they go? Where they go? Dude, this fucking Pokemon guys. What we got? What we got? Oh, absolutely nothing. Absolutely fucking nothing, as always. God, I hate my life. God. All right, you can see why I like those shorts so much. I was so confident in those shorts, guys. I was so confident. I wanted those shorts so badly. There it goes, down there 860s now. She's still going lower. Come on. If you're not impressed, I don't know what you want from me. Look at it. Guys, again, right? What is the difference between me and every other fucking guru on the internet? We're getting ready to move over to D-Money here. Don't worry. But let's be honest. What is the difference? Right? What is the difference? The difference is I fucking show you my entries. I show you my exits. I show you the winners. I show you the losers. Live. 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 Okay? Oh, God. Guys, you can see. Right? You can see right now. Look. Look at this. Look at that profit. We're up, up, up. We made money last night. We made $2,000 last night trading. Live on YouTube. We're at 81%. It's real. It's happening. We're making money. And now we got the D-Money show coming up next. So there it is. Let's do one more Pokemon pack. All right, here we go. Here we go. We're gonna hit. We're gonna hit. Let's see. Let's see. Oh, whoa, whoa, whoa. Actually, this could be good, chat. I'm not gonna lie. That's a full artwork. Japanese. Oh, looky. Quickie. You ready, D-Money? This is a picture of the chat. This is the people in the chat that always talk shit about me right here. This is what they look like in real life. Just like that. Like, with their little mouths open going, ooh, ooh. Patrick, you're a gambler. Patrick, you're a gambler. I said, ooh. Patrick's a gambler. Ooh. Shut up, bitch. Hey. Big shout out to everybody tuning in this morning. We absolutely crushed that short there. Down there through the 860s. Popping back up now. We got the D-Money show coming up next. If you guys have not already hit that like button, subscribe button, we're going to be live all day long making money right here. So we'll see you when I see you. Are you streaming? D? Bro, come what? Guys, they were sleeping. All right, you good? I'm turning off. Confirming, sorry. All right. See y'all.
Good. Good morning. Oh man. We back like we never left, guys. It's Monday, the 23rd, and I'm on a C4 here, so look out. Oh man. What up? Somebody said equal lows. Yeah, I see that. But guys, you got to play into the momentum right now, right? I mean, you got a rejection on the 5-minute chart for more than likely more selling pressure to the downside, guys. Right? I mean, that's what I'm. So we're right at the 24,879. That's actually your 15-minute opening range low. And if this 5-minute candle closes with some bearish momentum, guys, then look out, right? More than likely for more downside. That's how you got to look at it. So we'll see what happens here. You got a pretty significant close. That was a pretty significant drop as well. Previous 5-minute candle, that was an 86-point drop to the downside, guys. So can't be bullish right now. You got to be bearish. Like the rejection that I'm seeing, right, to the downside here. Rejecting that opening range. So if we lose the momentum to the downside, guys, 1-hour chart, you have to kind of keep this area in mind short term, because we've had like little bounces from this area. 24,800 level, but with the momentum that we're picking up here, we could easily flush that and head down to previous day's lows, which was Friday's close, 24,000, or sorry, Friday's low, 24,678.50. Yeah, my mic is all the way up, guys. You're gonna have to turn up your volume. So I'm all the way up here. So, but nevertheless, never fear. PW and D-Money's here on a Monday. So we back. And as we look for a reaction here off the opening range. Yeah, if you can't hear me, you got to turn your volume up because I'm maxed out. So turn your volume up, sir. So but all right. right back inside the ORB so far. No, we're guys, there's no reason to restart the live. Everybody can hear. So I'm always going to be lower than PW, guys. He has a louder voice. So just turn your volume up. That's it. It's a simple fix on your end. I mean, like, there's nothing else I can tell you, right? We go through this every day. So turn your volume up, guys. That's it. Turn your volume up. 15-minute chart, we're right back inside the ORB. We have so we'll see what happens here. That's a little interesting. Kind of bouncing back and forth here. Perfect fine with audio. Yeah, I appreciate that. Yeah, guys. So, hey, had a few trades as we kind of wait to see what happens here right at the ORB, right? So, Apex accounts took some of these trades last night. Quick scalps, just trying to slowly grind these accounts, guys, now that I'm back on NQ, because obviously there's no trading silver at the moment. So we'll take what we can get on these accounts. So these are the 20 Apex accounts here, right? So up about 6,000 across the 20 PA accounts. So we'll take that, guys, right? I'm gonna lock these down for today. These are done, right? So take the points and head out. We'll look at the Lucid accounts. Oh, man. Yeah, that's probably what it is, Matt. Yeah, I agree. Yeah, you just gotta turn up your mic. You guys still trade Apex? Yeah, I still have Apex accounts. So let's go. Took a few trades here on the Lucid accounts as well. So we'll see what we can. Give me 1 second, guys. See what else we can get here as we reject the opening range. All right, hanging out below that 879 level, chat. That's the opening range. That's your opening range low. So it's going to be interesting to see what happens here. Need to see something convincing for more continuation. If you're a bear, you definitely want us to hold 24,911, right? That's the 14 EMA on the 5-minute chart. You don't want us back above that level in the short term. What's the news? Hold on 1 second, because I'm looking at this potential short here, guys. 879. All right, so the news that you had at 10 o'clock was yellow folder, was not red folder, chat. Factory orders. So a lot of times you don't get a strong reaction. So just kind of waiting here. We'll see what happens here. Like the rejection so far, but we're hanging out right at the ORB, so just gonna be patient, not gonna rush into anything. You got two Lucid accounts that I traded on so far. These are green as well, guys, right? So just being patient here. See what else we can get. Just passed my first eval because of PW. Nice, congrats. D-Money's trading ICT. I don't trade ICT. Pricey, but you can go to ICT stream if you want. If you want to look at ICT. Nothing against them, guys, but if you wanna head on over to ICT stream, make enjoy. You gone. All right. So yeah, it's crazy, man. I don't get that. All right, so right back at the opening range, guys. So no setup right now. I do see obviously we're rejecting the. So far, we're putting in some rejections here. So I'm looking at obviously we got bearish structure as long as we can hold the 14 EMA, right? For more downside. So we'll see. Basically lower highs. Had a lot of bearish momentum on this 940 candle. Now you're getting a push back up, so gotta wait for a clearer setup here to see what happens. This almost looks like an equal low here on the 15-minute chart, guys. 857. Yeah, that's the equal low, chat, on the 15-minute chart. So you got the pop already, but 857 is the equal low. So I'm gonna let's keep an eye out here to see how we react at this equal low, guys. 857 is the equal low, and typically you'll try to get a pump to like 908 or higher, which is the 14 EMA. So for that equal low bounce, right? So I'm gonna try that, guys. See if we can get up past like 907. Entry was 885 for equal low bounce. Gonna put the stop back below 856. We'll see if we get momentum. I'm not sure because my entry is actually a little late, guys. But a lot of times you'll get a pop. So we'll try it on this account, right? This is only one contract, only one account. The other two accounts are green. Just gonna see if we can get an equal low bounce. My entry is not the best in full transparency, guys, but I want to see if we can get a pop up here, maybe the 927 or higher. All right, so that's 20 points plus. See if we can get momentum here, guys. And you got to chop right back down. So 927 would be. So let's see what we got here. Let's see if we can get a pop here. So it was up over 10 points pretty quickly, right? So I'm not going to give it a ton of room, guys. My entry wasn't A+ on this one because I saw that equal low kind of late. So, but I want a reaction here, basically for a snap to put in new highs. So we'll see what happens. Give it a little bit of time here. See if we can get a pop. All right, there's 15 points. Let's go, baby. Come on, guys. Got to watch this, though. We need a pop here really quick, not a reversal. I don't like the curl over. Need a pop to the upside. See, I don't like the curl over, guys. Right? Need a bullish reaction back up. It's kind of hanging out here. All right, there you go. Let's go, baby. That's 20 points, guys. Let's go. Let's go. Let's go. Come on, guys. Let's go. All right, we'll take it off. We'll take it off for the pop here. I love you. I love you. Oh, man. So yeah, it took a little time there, guys, and it's probably gonna pop a lot harder now, but I can always re-enter, right? So nice little equal low trade. And you still got to pop here, right? Still trying to pop higher, but that's basically the target area that I had. Look at that pop, more continuation there. Just took a little bit longer than I wanted. All right, guys, drop a W in the chat if you took the equal low call out. Saw it on a 15-minute chart. Just out here trying to make a little money. Let's go. All right, so let's kind of go over that real quick, chat. All right, so basically, you saw the equal low set up here. You had on the 15-minute chart, this candle 24,857.75, and then the current candle, guys, 24,857.50. So my thought process on the equal lows, chat, if it's less than a point, that's considered an equal low. It only qualifies for me if we've had a pretty good sell-off to the downside, looking for a pump or a reversal, and we had that, right? We definitely had almost a 200-point drop to the downside. So that qualifies, in my opinion, as a quality trade setup for some kind of reversal back towards the EMA, right? And that's why the target initially was like 920 area. I just passed, shout out to OSN, just passed 3 lucid accounts. Let's go. Turning 4-hour candle turning from red to green. Yeah, let's take a look at the 4-hour candle. I mean, you still got some time there though, right? I mean, it's looking, it could very well. Make no mistake about it, guys. We're back inside the opening range as well, the 15-minute opening range right now. So you got to take what you can get, chat. You know, price has been a little choppy, so you take what you can get and you move on to the next trade. But the equal low trade played out there. Nice call, D-Money. I think shorts are better today, though. Yeah, you got to trade. So remember, guys, you're not looking to hold these equal low reversals forever. You're basically targeting the 14 or 50 EMA on the 5-minute chart would be a good target price. And then you're looking to get out, right? Because a lot of times, even if they're going to drop price, guys, back to the downside, they're going to send it back to the EMAs, and you're going to get more selling pressure that steps back into the market. So you're definitely not looking to marry it, right? Meaning that you're going to hold it. But these pumps, guys, are a lot of times they're pretty significant, right? I mean, that's a 70-point pop. It just took longer than I wanted to give it for the full move. But as you guys can see, and by the way, chat, we did drop, there's an equal low video, pretty much almost identical example, right? If you think about it, if you saw the video this weekend, if not, you can check it out on the page where I'm breaking down a similar trade for equal low bounce to the upside. This is scalp, not day trading. So Payo or whatever the username is, maybe I pronounced it wrong, I apologize. So I scalp if price action's actually ranging or is choppy. Yeah, you're right, I'm gonna scalp. That's how you're supposed to trade, right? Like, I mean, you know, it's always funny, guys, that you know, so if you're saying day trading like swing trading, I'm not looking to swing anything right now. First of all, you don't swing trade if you're trading prop firms. We're trading prop firms here, so maybe this is your first time on the show, but we're trading props. And if you're trading prop firms, you don't swing trade anyway, right? You're looking for moves throughout the day, and you're closing your trade out before the end of the session. So it's always funny, chat, right? So scalping is literally day trading. Exactly. It's funny, right? How that works, guys. But nevertheless, we're here. We're here, guys. If you haven't already, do me a solid. Hit the like button. Saw a lot of W's in the chat. If you haven't subscribed to the channel, you know what to do. We just out here trying to make a little money. Got to be patient now, right? We want to see how price reacts right at the bottom of the ORB, bouncing off the low. So we'll be a little patient here, chat. See if we can frame the next trade. We're at 1,400 likes, guys. We got to get the likes up. So do me a solid, hit the like button. If you're not subscribed to the channel, I don't know why you wouldn't be. Just called out a banging reversal trade. Could have netted you roughly 70 points.
What? 70? What the fuck was I doing? I wasn't watching.
Hey, think you're on a call there, sir.
Damn it. It always happens to me.
Oh, man.
Hey, I gotta go fucking deal with bullshit. I'll be back. Can you roll to a 1, then I'll come take 1 to 4?
Yeah.
All right, thank you, sir.
All right, no problem.
I'll be back.
All right.
Fucking 70 points!
All right, so, all right, what am I looking for now? That's always the next question, chat. Well, you got to be patient because we just had a sell-off, and the question now, are we going to sell back to the downside, right? Basically put in these lower highs like we've just done, and then we sell back to the downside, guys. Going back down and revisiting 24,840 level or lower. I'm looking for some kind of reaction off the 14 EMA. Right now, right? I want to see how this candle closes on the 5-minute chart. That's also going to coincide with a 30-minute candle. 30-minute candle currently is bearish. So want to wait and see how this candle closes, because if it rejects the 14 with conviction, chat, after that doji candle here that we just had on the previous 5-minute candle, then you're looking possibly for more selling pressure to the downside. So that's the move, right? Somebody said that Ginger has a fine laugh. Oh, man. Ginger's getting... Guys, I don't know what's going on here, but, hey, dating show might be coming soon. You gotta love it. As we get more selling pressure. So not looking great right now for bulls, chat. Right? This sell-off here, rejection of the 14. Looking like a short is setting up, in my opinion. So we'll see. Got about a minute and 20 seconds left. D-Money, I passed the 50K eval a few minutes ago. This is me passing my 4th eval within 7 months of day trading. Hey, it's Xavier. Congrats. I'm happy for you, man. Congrats. Where would stop be? Well, I mean... I need to see how this candle is going to close, but if it closes back inside the ORB, it's not a short for me, to be honest. So I need to see how this candle closes, but preferably the stop would be back above the high of the current candle, right? So that 24,904.50. And it's looking weak. Shorts could be in play. So 30-minute, 1-hour charts bearish, 30-minute candles looking bearish. Is going to close out in about 15 seconds. Below the 14, 15, 200 EMA. So this is not great if you're a bull short term. You got lower low, lower highs. So that's not great, chat. You want some kind of push up back to the EMA, then you want continuation to the downside. All right, there's the push. Gonna try a short here, guys. Stop is gonna be back above the EMA, looking for lows down here at 839. Trying to ride the momentum to the downside, guys. Entry was 870. So if it yokes me, that's fine. But I'm just trying to ride the momentum back to the downside, right? Look for 840 area as a potential target. About 30 points to the downside. Just trying to play into the rejection, and you got a snapback, so you got to love it. So that's not great. So these are tricky, guys. This is a tricky area, right? With this opening range, you want follow through to the downside, right? We've already had a rejection of the 14 EMA, so you want follow through here. All right, there you go. There's a rejection. Let's see if we can get a drop down here to like 840 area. All right. Just need follow through. So let's see if we get it, chat. All right, there's 10 points. $840 is the area that we're trying to target, but a lot of times you won't get that initial drop. You'll get 10 points or something, right? Then they'll reverse it. So let's see if we get continuation to the downside here, guys. All right, let's go, baby. Come on, guys. That's over 10 points. You want to flush here, though, not a reaction back up. You want to flush to the downside. Basically, putting in a new low here. Let's go, let's go, let's go. All right, that's 15 points, guys. Right, then you got to push right back to the upside. So I don't like the reaction. I want to flush. There's 15. Man, I don't like that reaction. When you keep seeing this reaction, guys, a lot of times it's going to reverse back the opposite direction. So I don't like that, to be honest. Because you want to see follow through, right? So, yep, and there it is. There's a snapback. So you can kind of, I close that out, guys. Right back up, right? So it was up like 15 points. You got to love the snapback reaction. If you took the trade, congrats. If you close it out for like 15 points. I just wanted more, right? Wanted new low on the session, didn't get it. So got a little snapback reaction. Right back inside the opening range. Took 15, nice. Yeah, I mean, it looks pretty good there, guys, right? For more continuation. I like the rejection right now, to be honest. I like the rejection, chat. I like the rejection that we're getting. Not going to lie. Took it again. Let's go, baby. All right, there you go, guys. So I took that rejection again, right off the 14 EMA from 891. Not going to give this a lot of room. I'm going to close this trade out. Yep, so I'll close that there for the W. Don't like how they tried to snap back on me, guys. I don't like that, right? So I took that W real quick. So shout out to the chat. And I do feel like there's more continuation coming here on the reaction back to the downside, guys. It's just taking a little bit more time, right? Basically gonna flush 841. There you go. Somebody said they skipped that one. Hey, you might have skipped it, but this is probably the low that I was looking for initially. That's how it works. The first one, the first hit's never the deepest. It's the retest and then the drop, right? Look at what's happening. Oh, man. So if you took that one, drop a W in the chat, guys. Let's go. Because there's another rejection, right? To the downside, right off the 14 EMA. So that was about a 45-point drop. You got to love it. So in queue, I love you. So sometimes, guys, and I gotta be on. All right, there's the low, there's the low, guys. Right, there's the new low. You gotta love it. So nevertheless, hey, we're rocking out, guys. We'll take it, right? So these accounts are green. Let's pull them up here. Sometimes, guys, your first trade, you know, it's not gonna. That I tried it for the first short. You got snap back on right back to the 14 EMA, and then you got the follow through, right? So we'll take it, guys. I'm not complaining. The 3 lucid accounts are green, and we're rolling here, right? So don't you fear, the BDH is here. And there's more follow through to the downside, guys. It's still dropping here to that gray box that I had drawn out on the chart. So there is your 833 tap. That's from the 1 hour chart. I had drawn out this support level, and we're down to that level now. Shout out to Hulk. He said D Money's a bad mama jamma. Bad mama jamma. Hey, I appreciate it. But yeah, guys. So that's basically, so the first hit, that first short, I didn't like the reaction because we went right back to the EMA. But once I saw the wick, once I saw we started the wick back off the EMA, guys, and we dropped back below 879, the shorts were back in play. And that's just how it works sometimes, chat. You're not gonna, you know, your entry, a lot of times you're early on your entry. But NQ loves to basically do a drop. It does a retracement, and then it'll give you that lower low that you were looking for on the second drop, not the first one. So that's why I didn't hesitate to close it, and then I just re-entered on the next short immediately after. You gotta love it. John, I don't have to show the full account balance. Why don't you show yours, John? I can show whatever I want, sir. Like I don't have to show the full account balance. You gotta love it, man. It's weird, man. I've been studying your trading method, and the 14 EMA makes a big difference, and the equal low method. Hey, I appreciate it. John, yeah, I gotta come up with the name for John, guys. Right? We got Corn Dog Tim. Haven't seen Corn Dog Tim in a while. But if you're out there, Corn Dog Tim, we're a little concerned. It's been about a week or so. We haven't you know, we tried to do a wellness check and you weren't here, buddy. So if you're out there, let us know. Even PW was talking about you last week, so. Next play. Oh, man, you got to love it. You got to love it, guys. Somebody said next play. I just called out 2 trades and in less than 15 minutes, guys. And somebody saying, what's the next play? Somebody said Corn Dog Tim didn't make it. Don't say that, chat. Don't say that. I'm hopeful that Corn Dog Tim was just on a hiatus, and he's gonna be back in the chat. Don't you worry. I'm still holding the shorts. Nice, Chris. Nice, congrats. They itching for a trade. Yeah, I know. It's crazy, man. But guys, I gotta let the market kind of set up here now, right? You want a clean break. So basically, if you get a clean break below, sorry about that. So if you get a clean break here, you just had a reaction, guys. Keep in mind, I need to see what's going to happen now because this is a reactionary level on the 1 hour chart, chat. The last time we were in this area, we had a bounce back the opposite direction. So I can't just hop into another trade. You basically short it down towards that gray box, and now you want to see if there's going to be a reaction back the opposite direction. D-Money, call him. Let me see your account, John. Yeah, that's probably a good that's a good user ID name for him. Oh, man. As I'm kind of waiting here, guys, to see if we can frame another setup, we're going to give you the weather report for Fort Lauderdale. Don't you worry. It was a bit nipply outside, I may say. So I know PW was roasting me, guys, because I had the heavier jacket on this morning. But, hey. So here's your weather forecast for Fort Lauderdale. Don't you worry. So if you thought it wasn't happening, it's happening. So Fort Lauderdale, 58 degrees at the moment. It feels like 51. The low overnight, chat, was 47 degrees, believe it or not. So it was a bit nipply here. And the high today is going to be 62 degrees. And that's it. So it is definitely chilly here, guys. So it's cray cray with Lil Ray Ray outside right now. So make no mistake about it. And there is your weather forecast brought to you by D Money and the BDH. You already know. Weather in New Jersey is 24 degrees. Hey, I don't envy you. I don't envy you at all, Hector. So Rio trades 1,000 rocking every day, and it's nippy, not nipply. No, I say a bit nipply because it adds a little bit more dramatic effect, sir. You know, you gotta add your own spin to things sometimes. You know. Let's go. I'm on the C4, guys. So this is I get one energy drink a week. I had my daughter the last I was telling Ginger and the editor I had my daughter the last 5 out of the last 6 days. So definitely needed the C4 today. Here we go. More selling pressure to the downside. So this is why you wait, and you want to see now if we're going to get some kind of reaction. Back the opposite direction. The C4 got the buddy a bit differently. Maybe it's the C4. You might be right. Maybe it's the C4, chat. I'm not sure. But hey. So gotta be patient here, guys. 1 hour chart, super bearish. I'm definitely obviously interested to see how this candle closes out. You guys know that already. I love to leverage the higher time frames for bias. Right now we're selling off to the downside. So D Money, are you born and raised in Florida? Yes. So that's why, believe me when I tell you that right now for Floridians, it's cold, it's freezing, chat. So I'm not even lying. Do wicks count as equal lows? Yes. Yes, I count the wicks as well. So correct. So gotta see how we react here. Are we gonna continue to the downside, or are we gonna get a push back the opposite direction? We are getting a nice rejection on the daily chart off the 14 EMA. So gotta be patient, see what happens. Not gonna rush in anything, chat. Called out multiple trades already. So need to see what's gonna happen here. Gabrielle, 3126. Hola D Money. Hola. How are you? No chill. My dude D Money, I'm trying to hook you up with my wife's cousin. She's in Fort Lauderdale too, medical coder and from Belize, man. Hey, no chill. All right. Hey, now we're talking. I knew that the C4 was gonna work today, chat. So no chill. What's let me drop my social here. You already know. So that's my social there. Demarius Trades NQ. Hey, you gotta no chill. Shoot me a message on X or IG, or shoot me something. I need to see a picture or something. No chill. You know. She got no teeth. Who said that, boss? Come on, man. No game, Duke. Oh man, come on, man. D-Buddy thirsty. Man. Hey, so no chill. Yeah, you gotta shoot me something, man. Shoot me something. You know? Need to see a pic, sir. I hope your baby mama isn't watching this stream. Oh man, yeah. I hope she's not as well. So, but either way, nevertheless, we're back. Let's go. So you got more continuation to the downside here, guys. Right. So bulls are out of gas right now. So this is obviously a bearish market. You're getting some selling pressure here. Curious, like I said earlier, to see how we react. Going into the close of a 1 hour candle. So we're going to get a reaction here back the opposite direction, or we're going to get continuation. We'll see. Valentine's Day is over. I know. That's why I'm curious to see who No Chill is trying to hook me up with, you know? Oh man, D needs some loving too. Yeah, exactly. Yeah, guys. I mean, hey, when you write, you write. So let's see what happens here, chat. Going into the close of a 1 hour candle, right? We'll see if we get a bullish reaction, maybe some trickery, and then we get more continuation to the downside. So if you kind of notice here on the 5-minute chart, we are having a bullish reaction right back out of this range that I had drawn out off the 1 hour chart. That's about a 36 point pop to the upside. So we'll see. So 15-minute chart, you can see that clearly here that this was a reactionary level that I'm referring to, chat. And look at the bounce, right? Look at the bounce so far. D Money, were you a kid actor? You look like the kid from Like Mike too. No, I was not. No, I was not. Hey D Money, what's your overall concept on 14 EMAs? Yeah, so I use them as basically the EMAs. We got content on the page, chat, that kind of explains this, but I use the EMAs as confluence. I'm a momentum trader, so I'm looking for basically price to get a momentum, either bullish or bearish, and I'm looking at the EMAs as confluence. So as an example, the short call out that I took, those two shorts that I took, guys, you can see how we got a bearish EMA cross here on the 5-minute chart. So that's telling you that there's a lot of selling pressure, guys. When you look to the left and you see like large candles like this bearish candle right here, that's basically telling you that there's a lot of selling pressure in the market. You got one candle, chat, that closed below the 1450 and the 200 EMA in a single candle. So when you see that, that's telling you that the market has shifted bearish, and you're looking for how price reacts at the EMAs. You're looking for a bearish EMA cross, and you're looking for rejections off the EMA, because that's going to tell you that prices, so when prices and momentum to the downside, you're looking for lower highs and lower lows to be put in, and you're looking for these retracements back to the EMA and rejection for more selling pressure to the downside. So that's how I trade the EMAs. I use them as confluence with price action. So just keep tuning into the show. Don't you worry. You'll definitely see how I trade them, how PW trades with the EMAs. And so the EMAs tend to respond very well, or be respected very well when the market is in a trendy market. So in a downtrend, lower highs and lower lows, as an example, where price typically it's going to respect the EMAs, and you won't get a candle closure back above it, right back above all three EMAs. You'll just get a rejection and more selling pressure to the downside. So we'll see. We're in the last 10 minutes of the 1 hour candle here. Let this play out a little bit, and we'll see if we can frame a setup. D-Money, do you always at least have smaller time frame along the 5-minute? The City Rooster, yeah, the smallest time frame I typically trade off, chat, is the 5-minute chart. So I'm leveraging the 1 hour and 4 hour chart and trying to enter typically on the 5-minute chart. So the 1 minute chart is not for me, chat. Nothing wrong with it if you trade it, because I know obviously PW trades the 1 minute chart. I just get a lot of fake outs, so I just pulled away from it myself personally. right? You got to know how to trade it because it moves very fast and there's a lot of fake outs. So, but do me a solid, chat. We got to get over 2,000 likes here. So we got 5,000 plus people tuned into the show. So do me a solid, hit the like button if you haven't already. If you're not subscribed to the channel, you know what to do. We appreciate the support, chat. We don't take it for granted. It was a good day. Thanks for the work. Time for work. Thanks, D. Hey, have a good day, Sophia. How do you normally set your stop loss? Is market structure or set tick limit? Yeah. So typically it would be as you get more continuation to the downside right now, chat, right? Basically, every high is being respected right now and price is putting in lower lows on the 5-minute chart. You see that? See how you're getting like basically every high that's being put in is being rejected. You know, it's lower than the previous high. You're getting a wick effect and you're getting more selling pressure to the downside right now. That's what's happening. There's a flush. So she gone. Bears are in control, chat. There's a flush of that zone that I had drawn out. So we just broke and put in new lows here. So this is going to continue. Previous low of Friday, right? Previous day's low, which is Friday's candle low, 24,678 could be in play. Make no mistake about it today. Trade the time frame that suits your personality. Yeah, exactly. Yeah, chat. And that's what I'm saying. So you could trade any time frame, but you got to find out what works for you, right? It's whatever's. I say that all the time, chat. It's a preference thing. There's no right or wrong. People talk to me all the time. They send me DMs, etc. Hey, what's the best EMAs? Like, why do you use your EMAs? And I'm like, well, it's a preference thing. There's no right or wrong. But thanks, D Money. I'm up $800. See you tomorrow. Let's go. So, yeah, I mean, nothing right now saying to look for longs right now, guys. To be honest, you got this next level down here. We might as well map it out because we're getting pretty close to it, just to have it as perspective. So, which includes obviously, so this is the next support area on the higher time frame. So if we lose that 773 level, we could be headed to, like I said, 678 or lower. Got to see what happens. We got about 5 minutes and 50 seconds left on the current 5-minute. Current 5-minute candle is going to close, but you got about 5 minutes left before the 1-hour candle closes out. And you got a bearish EMA cross on the 5-minute, 15-minute, 30-minute, 1 hour, and 4 hours framing. So there's a lot of selling pressure right now in the market, chat. There's a lot of selling pressure. So ideally what you will want is some kind of push back up and then some kind of reaction back the opposite direction and more selling pressure to the downside. But clearly we're respecting the EMAs. So nothing saying to get long right now. That's what I'm seeing. Trump live right now, yeah. So, all right, let's check that out real quick. All right, where are you guys? All right, yeah, so it says live. Yeah, I see that. Trump participates in Angels Family Remembrance Ceremony. Yeah, I see that, chat. I see that. So if you guys haven't already, as we kind of wait for the 1 hour candle to close, let this close out and then you'll try to frame a setup at this point, right? Because you've had pretty much a flush straight to the downside here. So you want some kind of retracement and then a continuation. Why did Jerome trade the 5-second chart? Is he okay? Yeah. Hey. So, Chad, if you haven't checked it out, you can go to the page. Jerome apparently was on a run, broke out of jail, and popped up at the BDH. It was having a conversation with PW in regards to, I guess, their Pokemon deal that went bad. And, yeah, I mean, clearly he's still a little frustrated with me saying that he trades the 5-second chart, etc. So if you haven't checked it out, it's on the page, chat. You got to love it. Dump before pump. Yeah, it could. I mean, right now you're just getting, like, there's really, you know, remember, Chad, I called out 2 shorts already, right? So it's like at this point, how low are you going to, without a retracement, are you going to enter? That's the thing, right? Because, but it's still flushing. Make no mistake about it, Chad. Still flushing, obviously, to the downside here. You got a 1-hour candle that's going to close out in 2 minutes and 30 seconds. That's what I'm waiting for. And we'll see. Now we're inside of this 1-hour reactionary level. So we'll see if we get a bounce. So got a few minutes here. We'll let it play out. Henrietta, D-Money, I heard you talking about Corn Dog Tim. Please don't talk about the Corn Dog again, LOL. Yeah, Corn Dog Tim is an actual person, though, chat, right? So that was literally a live scenario, a real scenario that he, you know, said he was eating a corn dog. One day, randomly, he said he was eating a corn dog, chat, after I called out a trade. So kind of grew legs from there. Man, Manny Box just passed another evaluation. Congrats. More selling pressure here, chat, right? This is just straight to the downside here. We got about 1 minute and 10 seconds left for this 1-hour candle to close. That's what I'm waiting on here. And we'll see what happens. Let's see while we wait. So it looks like Jerome is back in Margate, chat. This guy's hanging out by an Applebee's. You gotta love it. If you haven't checked it out, where's Jerome.com? Unfortunately, you'll be able to keep tabs on this guy. I don't know why, but it's happening. All right, so let's see. We're getting close to the close of the 1-hour candle. Let me redraw that out. All right, there's the open of the new candle, chat. And let's kind of map this out just so we know where we're at. Inside of that support area on the 1-hour chart. So you definitely will want some kind of push back up and then a rejection for more continuation to the downside. I'm going to map this real quick. All right, so that low is 678.50. Let me go back. Friday's low. Yeah, I just gotta add it back real quick, chat. Give me 1 second here. Just doing the daily. so we have that range in check here. 25,059, 139.75. All right, so we're stuck inside the range, this little support area. So we'll see what happens. 15-minute candle range. Obviously, we know we had mapped out. This was the bearish candle up here. And we'll be patient and see what happens. Right? You want some kind of pushback up, guys. So like I don't want to get short all the way down here at this point. I want some kind of reaction back up. Maybe up to the 14 EMA, 24,831, and then you get a sell off back down, right? As an example. So we'll see. See how this plays out. Just waiting. And you got more selling pressure here. Good morning. I love me some D Money. How are we doing today? Yeah, I'm doing pretty good. I mean, you're just getting a flush here. That's the only thing, guys, right? I mean, this thing is gone. It's crazy. Bears are not they are flushing this thing down, guys, to the bottom of the range. So just straight continuation, right? Right at the open of the 1 hour candle. So you got a small, this is the 1 hour chart, chat. You got a small top wick and you got a flush here. I mean, this is cray with Lil Ray right here, to be honest. So it is a lot of selling pressure here, straight to the downside, and you just want some kind of higher retracement out, ideally, right? Unless you're gonna kind of gamble here and put your stop maybe above a previous candle's high, etc. But look at the flush. This is just straight selling pressure, guys. I mean, current 5-minute candle. So at least, I mean, hey, we know where the momentum is, chat, right? Clearly it's to the downside. 70-point drop right at the open of the new 1 hour candle. You got to love it. So you want some, all right, so keep an eye out for 24,678.50, guys. That's yesterday's daily Friday's daily candle high. Buyers are stepping in. Yeah, they could, but hey, right now, that's what you want. I mean, look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Guys, we've had 9 bearish candles in a row on the 5-minute chart. So just to kind of give you an idea, right? We've had basically 45 minutes of straight sell pressure, no relief. So you got to love it. Trump declares family's angel starting today. It will be a holiday and the market will plummet. Have a great day, D. Thanks for the insight. Yeah, you too. Somebody say equal low forming. Yeah, we're going to find out. because I see 691. Nope, new low, guys. Man, this is your 15-minute chart, chat. Keeping an eye out to see if we get some kind of bounce from this area, right? Right off the low, guys, we just tapped basically 24,678. Pretty close to it, and we had a bullish reaction so far. So let's see if it's time for the bulls to step in here. PW will be back at 1 o'clock today, guys. He'll be back at 1 o'clock. He has some things he had to do. He's gonna stream. It sounds like 1 to 4. So but yeah, if you didn't get short up here, you gotta kind of wait now, right? You want some kind of retracement back up. I mean, that's basic. Let's see the low here, 679.75, 678.50. ES double bottom? Yeah, it could be. So yeah, I mean, you got to take, so oh man. So this thing just went blank. Hold on, chat. Hold on 1 second, guys. Mega rally incoming. Yeah. All right, so second, guys. I'm not sure why this. Yeah, it just went blank. Give me 1 second, chat. Don't you worry. We're back. Yeah. All right, so having a reaction here. You had a flush of the low, 24,678.50. And gonna be curious to see if we can get a bounce to the upside. For some kind of retracement and then continuation. Just past 20 Apex accounts. Nice. Yeah, I mean, hey, if you caught that drop, chat, I mean, that's Hold on 1 second, chat. Nah. It's like unreal. It's like it signed me out. It literally signed me out. You gotta be kidding me, man. Yeah. I don't know what's going. Yeah, give me 1 second, chat.
Oh, good one. I won't be long, kids. Stay where I can see you.
Look, it's Dad. Dad's on TV. Hi, Dad. Oh, look, it's Coco. Hey, Coco. Hey, over here. Hey, look up. Hey, where'd she go? Bluey, look, it's the terriers. Hey, terriers. Hey. Mom, please, can we go home? This place smells like Grandma.
Oh, that's a bit much. Oh, Scarlet Bombshell.
Ah, it's Bluey. They've seen us. Hooray. Hi. Hi, terriers. Oh, they're gone. It's Winton. Oh, yeah. He's seen us too. Hi. He's dancing. That will get Coco's attention. Oh, yeah. Coco's not looking up. We need to find her and see if she's okay. Where is she? I don't know. Somewhere in here. I can go and look for her. Yeah, and I can guide you on the TVs. Yeah. Go and ask Dad if that's okay. Yes, okay. Go out that way. Go down that way. Yeah, that's it. Keep going! Find Coco! Ah, you found Winton! Hi, Muffin. I'm sorry I can't stop sucking my thumb. It's okay, Muffin. I think I have to wear my cone forever. Well then, we're going to think of a game where your cone is okay. Really? Yeah. Thanks, Bluey. What if we pop it down? Oh, yeah. Aunt Trixie didn't say anything about that. Ooh, okay. Yeah. You look like a wedding wife. Or a traffic cone. Or a ballerina. I know. Let's play wedding wife, traffic cone, and ballerina. Yeah.
Sorry, Trix. What happened to the chips? Trix?
It might be time to take off Muffin's cone.
We're getting married. We're getting married. We're getting married. Please go around the traffic cone. I said, please go around the traffic cone. Oh, husband, thank you so much for taking me to the ballet show. No worries, bye. Wonderful. I'm real, babe. Bluey, the seed is hatching.
Muffin, honey, you can take off your cone now.
Hooray! Thank you for hatching, beautiful sunflower. We love you.
Don't fucking hold in front of it. And I think we should get a new low of day if we snap 700s, because I don't like the auction at the low. Is Alex going to get stopped out again? He fucking is. They're going to go for 50s now. You prick. He said he should have stopped. Ah, you mother clucks. Go on then. Go and rip my face off and go to 50s. Fucking talk about a dance. Oh, might still be all right. Might still be all right. Here we go. Come low of day. Come under 700s, go low day. 682 rejecting SPY, which is good. We need to come back under 600 now on QQQ, otherwise we are cooked. If they start supporting that bid, which is basically 700 on NQ. So if we don't get under 700 on NQ, then I'm toast. Here comes the seller, 720s. We've got to get 700 and under. That's the pain point, and they can't do it at the moment. If they keep holding here, we will go 750, 770s. Out on that squeeze before it comes. So here comes the 750s. I'll have one more go at 50s and 70s if they do it. Seriously, you're not even going to reach it now. Tape is so jumpy right now. I just want to make sure I've got this right. 50s, yeah. Where's the next lot? 75. 50, 75. Okay. Here goes 50s. Man, that low day auction's so bad if they're going to print this all the way back up. 50s and then 75s possible. Maybe 800s if they want to retest value. But we're into a level where all these sellers came in earlier, right? All these sellers up here. So I'm waiting to see if they defend these same levels. So we just tagged into that 50s. Still didn't fill that 100 lot. They're emotional. Not really. So 50s clean out. Do they squeeze 75s? So if they get through 50s, they got a chance to go 75s and maybe even 800s. Gonna stick with the short thesis and look for the bulls to get trapped. I think this is a bounce which will be faded. It just depends how far they really want to squeeze this, because I don't like the low of day auction. So here's the 50s, another 100 lot buyer coming in here, trying to squeeze us up to 75s now. Get rid of this. We hit those targets. So second leg developing here. So I'm interested basically to see if we develop the second leg into somewhere here. Maybe it comes up into 800s, but somewhere here, and then offers ideally some kind of short here, and then maybe even an add for this rotation, because I don't think this is finished. But I have to be aware, if we want to do this, we will leave this for tomorrow or later in the week. It's possible. It'll be very ugly, but if we do that, then I'm going to mark that out to come back for later in the week, because this is ugly. Yeah, ES low of day auction does look a lot better. Absolutely. Do they hold the 50s here? Can watch for a trigger if we start letting go. Also be aware, if we're going to hold previous week value area low, then it's a look below and fail, and we're just going to rotate previous week value again. Be another day of rotating previous week's value. Have to be very aware of that. Very, very aware of that. So 75 coming up, and then if they get through it, 800s without a nice auction at the low. Great, NQ. Thanks so much, NQ, for doing that. You turd. You turd. All right, 75s. Do they want 8s or do they just want 75s? 8s. Squeeze on. It's where all the sellers came in earlier, where we are now. Buyer stepping up here at 760. He's trying to support the bid now. He's trying to support the bid. And he's just juggled down to 50s. Someone's playing games here. All right, sensitive area. Here to 800 is very, very sensitive. Grey box. It's always the same grey box, Rich, isn't it? It's volume. It's not off today. It's off the previous week, right? Squeeze up. When they're done with this, they will let go of it. It's just if and when they're done with it. Are they done with it today, or they're going to be done with it tomorrow? Watching 50s, okay? I'm watching 50s. If they keep lifting, they can come and test 820s. This is gross, the fact that they've been able to do this down here. What a terrible auction. Absolutely terrible auction to reverse off. Makes me think they're not done with it. But, well, they've reclaimed 600s. They're almost at 602s now on QQQ. So they're going to have to defend 602s. And if they don't, then we're not going to get the auction we want. So we'll see. Back to 8s. No, I'm not in a trade. I already told you when I was in the trade and got knocked out. And I'm clearly not in a trade right now. I'm waiting for the short. Is there anything for me to short at? What did I just say? Waiting to see a reaction at 75s, waiting for 50s. I don't think we're done with this to the downside. Honestly, just based on the auction at the lows on NQ. Maybe ES's auction was good, but on NQ is what I'm playing and what I'm watching. Okay, watching 50s here. If they don't support the bid at 50s, I'm interested in that wash all the way back down. This is so jumpy on the tape. Look at this. I don't know if you look at bookmap above me. Look at this fucking idiot here supporting and pulling the bid. Someone being an absolute joker. What is this? What is that underneath? What is that? It's not good is what that is. All right, still waiting for 50s because that's where the big buyer came in for that force through. It's where the sellers were earlier. Starting to get stuck here a bit. Big buyer coming in here, not moving price higher yet. It's interesting me. I just want to see a good close. I want to see a reaction. Come on, come down in 50s and show me. Still got this guy underneath being an absolute cretin, adding and pulling and adding and like literally every 2 seconds. I don't know if you can see this. Like, what the fuck is this? Look at this guy adding and pulling, adding and pulling, adding. He's being an absolute idiot. I still think they've got a chance to move lower, but you know, trying to wait. You're a fucking idiot. You're an idiot. You're an absolute idiot. That last comment. I can't think of anything more stupid in my life than what you just said. Okay, here's the 50s test. Do they absorb down here? They're adding lower now. I'm really interested in a short at this point. We've just got to break down. I'm not going to be early to it. Ooh. '50s getting tested again. Big shelf here being developed. Big node. I'd almost rather it just squeezes out here. Gets lots of buyers to trap in and then just slams it on their face. It'll actually be prettier than the 50 move now. So I'll consider 50 fail because of where they are for a move that down to lower day, and I will be can't draw it for you, and I'll be taking partials. I will consider this, and I'll be taking some partials, or I'll consider this move here. I will not consider the longs right now. It's just because of the lower day auction looks so bad. Keep coming down to this 50s. We have an imbalance down here. If we trade under it, I'm going to look for the short. Here's the 50s. Can we trade under this now? We're going to stay heavy here for the short or not? Still absorbing it, absorbing it, absorbing it. Think it's coming. Is that last shelf? 64, 70, 77. So still absorbing it. So 50 to 75 is a rotation right now. Oh my God, like TradingView, please stop with this mouse shit. Did they add liquidity lower day? But now bookmaps laggy. Come on. There we go. Still waiting. So we're holding the monthly and weeklies at 710 still. I need to remember that. I got to respect that 710s. I have to respect that 710s. I have to remember that. It's 2 days in a row. Okay, failed up there again. Still can't clear out 85s. This node here is developing. So underneath we have a weekly. This is our current node. I'll do it slightly different colors so you can see it. If we hold this, we will travel to 822s. I will not be playing long. I cannot repeat that enough. I think it's just not the one right now. If they go for that rotation, fine. But right now, it doesn't feel like a long to me. It feels like the opposite. It feels like this is a squeeze back up. And when they are ready, they will probably sell back into it. We just rejected 602s on the QQQ. So we're going to bounce between 600 and 602s on the QQQ. If they get through 602s, they will go 603, 603.50. But I won't be playing that. I'll just let it do it. I want to be short on this when it's ready. If and when it's ready, I should say. It seems squeezing. Yeah, this is a squeeze. That's exactly why I want to let it squeeze out and then get ready to fade it. Only because the lower day auction is not very good. But like I said, I've got to remember 710s. Where's 710? This level here is a massive weekly options level, which they're holding. So I have to respect that. But under there, I think there's a trade back to there, and under there we'll see what happens. Again, still this 750 being supported so far. Where that seller came in earlier in the day, where the buyer then traded back through him. We're now supporting flow zones. So they are looking for a move up. It's just how far are they looking to move this thing up? Do they want to fill all these imbalances up into 820s? We've got a ton up here, a ton. If they really want to come for it, they would have to get over 80 for that squeeze. Look at all this selling here. This is the same level as earlier. This is a battleground now. In that grey box, the same grey box we've had for weeks on end now. They're trying to sell this back under this 50 again. They're having another go. And they go 75s. So are they going to go for these imbalances? 810. I don't mind either way. Under 750 or up into 800, 810s. Just don't want to trade this location here. Need to move away from this level here. I might sell it when I go to lunch. Oh, I didn't realize only 20 minutes left. Well, it's possible. It's possible. I can't believe they've done that down there with no excess. Cannot believe it. They're trying to force this squeeze for a new leg up here. They're trying to get to those 8s and fill those imbalances. 810 was where a big seller came this morning. It's also your sort of Globex level, right, that we traded under. So maybe they can lift it up to there. We're about to find out. Is that imbalance indicator on TradingView? Yeah, if you're using Footprint, you can have it on there. Yeah. Failing the top side of this mini range again. They still can't get up there. Please, either way, either come under 750 or go up to 810. Or like, please just stop staying here. Please. Market. Killing me today. Fucking hell, mate. It's not challenging my thesis, is it? It's not challenging my thesis if you're saying volume profile is fraudulent and shit. You're not challenging my thesis. You're challenging all volume. It's not my thesis you're challenging. I didn't make up volume profile. You can do what you want, mate. But to think that volume profile is, what did you call it? Like a scam? Okay. So the one bit of generation data which is actually real and actually accurate that professionals use, that actually shows real historical data, real trades that's taken action as a scam. Let me guess, like fair value gaps and order blocks are the real deal. Come on, man. Exactly. Okay, back to this same level. Still looking for us to leave this level and come and take out 50s, and then I'm interested. Or to trade up to 810s and get stuck up there. I don't mind each way. It's starting to be a heavier tape here. Let's see if they're going to leave this now. Back to these 60s. They keep absorbing the edge of this node, the bottom of this grey box. Well, if they let go of this and let go of 50s, we can go back low of day. So into 60s again. Absorbing here again. Buyer turning up here again. Is he going to get out of the way and give us a trade here? Just moved my value area accidentally. Let's change that ninja. There we go. Okay, eyeing this for the short if we start breaking down. Still holding, still absorbing here. Come on. Let's go and complete the auction. You've done your second leg. Let's come and back down here. Would be really fun. Here we go. Back into these 50s. Watching this guy now. And if we're going to let go, I'm going to get short. Back down for low of day. If we're going to absorb at 50s, I can't do anything. It's the same level. It's where that seller's been stuck, right? Previous week value area low, kind of around there. Still absorbing. What's this? 37's. Got to make sure that's accurate. 37. So I'm waiting for this player to get out the way. Right? This is what they're defending. This seller here. Once 50s goes, there's a chance of a rotation back down towards. There's like at least 50 points, if not a new low of day because of the auction, if we let go of 50s. So that's what I'm waiting for here as the trigger short. So we're testing him now. And if this lets go, I will look for a short and try and get back down to 700 and then maybe even a new low of day if it gives me enough opportunity to add on. I want to be very careful if they protect value. Here's the 50 test. Still buyer here for now. Once they let go of this, there's a 20-point snap very quickly. Still protecting this. Get out the fucking way. Give me a trade. For God's sake, guys. They retest. It's interesting. What's this? 60. I can't even measure out now because of this mouse. 60. Let's see if they sell 60 and flush now. They just shove it. There's 50s again. Really interested in the short here. I'm going to have to put a little piece on versus 65s here. So short now, and I'll add at 60 if it pops and traps. And I'll cover some 30s and then 700s. Here we go. Come on, get under the 30s. Come on. Come on, let's have some fun. Fucking hell, mate. Get out the way. Get out the way. You're going to stop me out again. Are you going to stop me out again here? Cooked. Fucking cooked. Come on. Be kind. Come on. Finish this. Got to get back on the previous day low on ES. Here we go. Come on, baby. Come on, baby. That's a good girl. Let's go. Get under value. Get under value. Go 700. Go lower day. Let's go. TP1. Get under this now. Let's go 700. Already paying myself some here in case they hold value. I'd really prefer if we just wash straight back down to 700s here. Because this is where we had a big seller step in at 700. So if we can wash this, we're going to go 700. And like I said, the auction at lower day is not very good. I think it will probably need repairing. Whether they do it today or tomorrow is another thing. But ideally, we will get that at some point. Would not want this to reclaim 750s now. After we've done all that work to get under that player. Be a look below and fail if they reclaim 750s. And it will be a hold of value area low from previous week. We've got to stay heavy versus 750s now. Stop moving. I've paid myself some, so it would be break even no matter what. But stop moving to 60s And if they take me out again, that'll be my last trade of the day because there's only 10 minutes left. Gonna test me. Almost taking me out. Stops at 60s. Nice rejection there. Buyers trapped a little bit on that last shove. Minutes of what left of this hourly bar, and then I'm done. I'm going to lunch. Breakfast for me, lunch for you guys. Don't reclaim it. Fucking hell, mate. You're going to do me again on the runner. Cannot get a runner to go to save my life for the last 2 weeks. Still not taking me out yet. Might get lucky here. Might get lucky here. I'm right on that shelf at 60. Trying to use that low volume node. No, out. Just swipe me. Out of bullets. Out of bullets. Out of bullets. It's going to go. It's always going to go when I'm out of bullets. It's always going to do it when I'm out of bullets. Here you go. I know, folks. I know you're right. Just got to watch ES keeps absorbing on previous day low here, and that's 682. You want to watch that on ES. It is a put wall, and they've moved it up. So, I mean, they can absorb here. We can put it on here. Where is it? You're holding value. So this is the wall that I was talking about, the under over for the options. They're absorbing versus this now. They're failing versus 90s. If they get over 90s, they can go to neutral ground, which would be asking a lot. So I don't think they'll probably do that. They might have a little push above and then fail back down. This is the level I want to cover into. And then hold in case we go bleed. But I'm out now. I'm out of bullets. I'm completely out of bullets. What are you going to do? What are you going to do? Will your risk strategy allow you to widen your stop a bit? Seems like you're barely getting tagged every time. I mean, it could, but the problem is I don't want to get skipped, right? So if I'm short at 50s and paid myself some into that, I then arguably I could risk the other side of the shelf, but you know, if it comes here, I'll get stopped and I'll probably get filled up here. So I'm just trying to be a bit more proactive in a range. Is longing now bad? You just got to remember that you're in a heavy day. I mean, where are you trying to get long relief to? You've got this, which should act as resistance. All right, you've had 2 legs up after a big sell. I don't like the end of day auction. I mean, if you got very lucky, they'll do this for you today. But I think it's more probable to do this right now because of the auction. I mean, what's your setup? What's your long setup if you're looking for a long? Do you have a setup rather than just saying I'm looking for a long? What's the actual setup? That's what you've got to think about. This mouse is driving me fucking mad. All right, let's get some giveaways ready. Fuck, not my day today. Not my day. Other than those overnight accounts, I'm basically scratch. I'm up like $60 on each account. It's a fucking joke. I don't know the cursors because trading views garbage. because trading view is garbage. That's why. Let's get you set up. It's starting to reject that grey box. I don't know, folks. I haven't set it up yet. Give me a second, guys. It's starting to reject that. Oh. He's out of bullets. He can't do it. He can't break his rules. He's out of bullets. He can't do it. All right. Have we got enough likes for a start? No, we haven't. We need to get 1,000 likes. So at least half of you haven't hit that like button. So we need to get over 1,000 likes. So smash that like button. We'll do Apex giveaways and some course giveaways now. Seven more likes, guys. Just get me to 1,000. That's all you got to do. All of you watching. There we go. All right, so just type FCT once in chat. I will go through some prop firm news because there is some news to go through. But we'll give away a free Apex account. So just type it once. Oh, I'm so frustrated. 60 bucks. I'm up 60 bucks. All that effort. Fuck am I going to do with 60 bucks? Well, I guess it is 14 accounts. It's not quite so bad, but give you guys another minute. Oh, you're still holding just about. I just wonder, man. Is this thing done? Now I'm out of bullets. Is it done? Who knows? Green is green. I mean, yeah. I mean, it's not red, isn't it? Is it? So, I mean, it's just. It's not red, but it's not good. It's not good. I missed that whole short. Didn't like the long because the lower day auction's terrible. I'm convinced we will come back for this low of day. That is not a good low of day auction. No way. I'm convinced we'll come back for that. But it doesn't have to be today, and that's the thing to always remember, right? It does not have to be today. All right, pulling this winner. The winner today is Chingy Uku. Is that how you say it? Or Ching Yuku? Not sure how you say it. CHING Yuku 8046. Let me know you're here, please. Nice. Congratulations, buddy. All right. All you got to do is send me an email, info@flowzonetrader.com. Send me a screenshot of you logged in. I'm making a note of your name now, and I will sort you out with a free Apex account as soon as the stream's finished. All right. So info@flowzonetrader.com. And we'll give away some other stuff if I can get this set up. All right, we'll give away a beginner course. Just type it once in chat. Oh, God, here it goes. Here it goes. All right, if you're in this, you're looking for a breakdown here to 700s. You're looking a breakdown here to 700s. And you just need ES to get under previous day low. I don't know if anyone's in this. I'm not in it. I had a go at 750 a few times. But again, you could TP1 here, and then you're looking for 700s. And then under 700s, I would mark out 680 and then low of day. Low of day does not look good to me. I think this thing wants a new low of day, personally. You got 1 minute to lunch now. How frustrating. So these are your cover points in my mind. A little bit here, and then you're looking for 700s, so a little imbalance above 700s, and then 680s, and then near low of day. 710s as well, folks. Remember, that's a big options level. Should say that. All right, let's pull this winner. Habbo Storter, is that? Habbo Storter 23. Habbo Storter 23. Are you there? Let me know you're there. Right, some of you are so delayed. Give you guys 30 more seconds. Habbo Storter, you got 30 seconds. Let me know you're here in chat. Otherwise, I will re-roll it. Guys, stop typing FCT. You've missed your opportunity. We gave it away already. All right, re-rolling if you don't say anything in 5, 4, 3, 2, and 1. Okay, unlucky, mate. Supper 1. Are you here, Supper 1? Supper 1. Guys, stop typing. Just stop typing it. It's done. It's done. Congratulations, Supper. I'm going to sort you out. Just email me info@flowzonetrader.com. Screenshot of you logged in. It's a loss of $1,000 because you're confused with long premium section. What are you broadcasting when you're not even buying and selling yourself? At what point have I been long? And also, you have zero understanding because this isn't premium, this is discount, and actually we're leaving volume. So that's why I'm broadcasting, because I understand what I'm doing. I don't know what you're doing, mate, because you clearly can't read a chart from what you just said. And I have not been down $2,000. If you're down $2,000 because you're longing the top, then that is your fault, my friend. That would be a long in premium, which is not what I've called for at all today. What I called for today was to ignore all of this and wait for us to leave trap liquidity here. And I missed this short down because it wouldn't give me my entry. And now I'm waiting for either a retest of this, which I've had one go of, or up here to come back down because we're outside the initial balance and we're outside of volume. So I don't know what you're smoking, mate, but maybe if you could send some my way because it sounds quite fun. Hi, Alex. What levels do you reckon looking for swing positions? Previous week value area low, previous week value area high. Yeah, weeklies are good, but it's also understanding narrative, right? So right now on the dailies, right? What are you looking for swing wise? Because in my mind, and I've maintained this for a long time, we've left trap volume. All right, we are trying to attack this, and once we attack this, we're pretty thin. Down to 24K. We've got a few nodes, but really down here. Now, I don't know if we come down here. You know, do we have some big event? Tariff 2.0. Remember, tariff 1.0, which gave us, how much was this pullback? 26%. 1.0 was 26%. Do we get tariff 2.0? I mean, that would be right down into here. I don't think we're really going to go down into it. But I think there's a chance of a fade down into here, definitely into here, 10%, probably into here. But we're just going to have to see. So if you're swing long, you want to wait for it to complete that move. If you're swing short, you're probably late for a swing short. You wanted that bull trap swing short, which was this move. These moves here, right? These moves here, right? Lower bowl, back to mean. Probably going to go lower bowl 5-day with a trend, unless Nvidia saves the day, which I find somewhat unlikely at the moment. But we will see. We will see. We can't predict the market. We can only react to it. When do I switch priority from previous day to current day? Well, obviously current day matters more and more as you develop, right? So like once you see big nodes being developed, like we now know in the current day, okay, this is important, and this is also being developed in a previous week node, right? This is important, but this is also being developed in a previous week node. This is important for high of day, right? Because we know buyers are trapped up here. So I'd be watching for this. If you're adamant on playing that, you could, but then I'd be watching on this and this, because this is not a good low. Said it numerous times. Not a good low. Maybe they get this squeeze back up here and refade it down. Maybe we just do this the rest of the day down here. Remember, we're still in range. If we just zoom out to the hourlies, I feel like such a stuck record, but people are just unwilling to listen here for some reason. Right, the hourlies, we are still stuck. There is a chance for expansion, like I'm saying. There is a chance for expansion down here to clean all this up. We have a node here and under that as well. So we might see something like this. It doesn't have to all be today, and down into this. Very, very possible. Until that point, we have to respect previous week value areas. At the moment, all we've done on a Monday or Sunday to Monday, we have rotated the whole of last week's value in one session. Push, fail. That's it. We're still stuck. I would love to see this. I think the market needs this, but they might need to wait until Wednesday to do that. Very well might need to wait till Wednesday. Where am I going to go and enter today? Well, I'm not now. I've been knocked out so many times. NinjaTrader and Tradeovate, the same thing with prop firms. If not, what's better for new? You get data from Tradeovate. With Tradeovate, you can trade on NinjaTrader or on Tradeovate. Web platform is up to you, but they are the same company. Yes, sorry. Interesting news about props. Sorry, almost forgot about that. Yes, there are some good sales on at the moment, which just started. Let me find them for you before they tell me off. All right, Funded Next has a 5-day sale on its 100K accounts. All right, so 100K accounts and Rapid accounts, Legacy or Rapid, both currently up to 40% off. Code FCT40. Okay, so you can get a 100K Legacy account down from 249 to 149 and a Rapid down from 279 to 199. There's no monthly recurring fees, and there's no what would you call it, fees, PA fees, whatever you call it, activation fees. All right, so that just started today. So one-time fee. Did I make any trades? Yes. I waited a long time, got knocked out. I can't remember where it was. I forget where it was. Somewhere here. I was looking for TP1, TP2, TP3, and I got knocked out here versus IB, unfortunately. Again. You only need $26 to pass your eval. Still managed to mess it up. Need 150 now. Just back off, Sensei. Just back off. Wait for a really good setup and you'll get it. Is it worth trying a prop firm in addition to my personal funded account? I have NT. Yeah. I mean, it's up to you. If you want the extra leverage at low cost, yes. Probably go with one where either you can have daily payouts or you have no trailing drawdown if you're used to trading already. Where can you backtest strategies? Well, you could use ChatGPT. You could use any of the journaling platforms. You can always use, what's it called down here? how do I get it up on here now? You can use TradingView as well. It has a backtesting part of it. I can't see the code at the bottom to enter it, but you can use all of those. And you can manually do it on TradingView as well if you really want. But if you have a set strategy where you could use an algo, you could put it in and it would tell you a win rate. You could also just use ChatGPT nowadays. Alex, I made too much money today on my funded, up 4,500, but can only take payout once account reaches 15,500. How would you deal with this? I don't understand what you mean. I'm up too much of my funded. I'm up 4,500, but I can only take a payout once it reaches 15,000 because you're above the consistency. Just keep. I wouldn't even try and give it back. I'd just keep trading. Just keep trading. Don't lose money. Just keep trading. Not today, like the next day. What was the prop firm? Funded Next. Funded Next. So if you use code FCT, I think I posted it in Twitter. I posted it in the community on here. Funded Next, code FCT40 will get you 40% off the 100k accounts for the next 5 days off. For the next 5 days, that sale's running. It's a very small sale. What helps you not go on tilt? Well, you would have seen me here when I get annoyed. I just know that I'm on tilt and I just leave it. You can't not go on tilt. You have to recognize it, right? So you can't not do it. You just have to recognize it and be like, I can't trade now. Or take a timer, wait until you're feeling a bit better. Maybe you have one more go like I did, and then you just back off. FZT, Flow Zone Trader 40. What's the sale for Lucid? I think it's 50% off at the moment for Lucid. I posted that as well. You can just use code FZT for Lucid. Let's have a look. I think it's 50. Just for 2 accounts though, yeah. FCT on Lucid will get you 50% off, but you can only have 2 accounts with that sale because it's such a big sale. So both of those sales very, very good. Are you still in short? I'm not in, but you guys look okay right now. But I mean, you should have already paid yourself a bit. You're still rejecting this. Once you swipe under this, you're looking for 710, 700, and then 680, and then low of day. For me, this was a squeeze to get sold into. If they keep basing here, obviously, if they reclaim this, then they're going to go for one of these moves up here. It's just, look, we've gone to sleep into lunch, unfortunately. I'm just salty because I got knocked out here. Wanted to take this reprice to fail from IB. And it looked good. And it just got no follow through. It's a nice reprice off IB. Also makes me laugh. I see on Twitter at the weekend everyone talking about initial balance like it's some brand new thing. Check my IB video, bro. No, guys. Funded Next, FZT40. For everything else, FZT. info@flowzonetrader.com. Do I trade evals differently than funded? Yeah, I do. I'm much more aggressive on my evals. But I don't advise that. It's just I call it time decay. I don't want to waste too much time. If you're a newer trader, you should practice doing everything together. But I'm more aggressive on my evals. How do you use fib levels? Just from swing points. From swing points. So if you were going to look for a retracement of the whole of the New York session today, you would go from the high to the low. And a retracement 50% would be into this node. So that's possible today if they want to lift it into 855s. If you were looking for IB expansion today, all right, then you will see this 100% expansion of IB. If this is IB, if we were going to do 100% expansion, we would come down into here, which is where I'm looking to trade into, this gray box. All right, we've already hit the 61% expansion on it. So it's always swing to swing. Maybe IB to VWAP. I mean, you're a long way from IB to think about. And why would you trade that? IB to VWAP? There's no trade there, is there? There's your IB. There's VWAP. There's no IB to VWAP. We are in an IB expansion day, right? We're in a trade lower day. This is why I'm trying to trade lower. We're leaving volume. Everyone desperate to talk about the longs, but look, we're leaving volume, higher time frame. We're leaving lower time frame volume. We're trading lower. We're in a sell right now. We're getting stuck up here. We're coming back down towards this 710, 700s. Like, it's so... I don't know. I don't know why I bother. You hope Apex extends the offer period. When does it end? Is it tomorrow? I would say it's probably unlikely because they've done quite a lot of sales already. When does that sale offer? Let me check. So you got all of tomorrow to buy it as well. So 90% off on Apex today and tomorrow. Code FCT. I would very, 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 very much doubt they will extend that 90% sale. I do not see them doing that. I'm just being very honest with you in case you guys are actually looking for it. I cannot imagine them doing that because they've run two 90% sales very close to each other. Normally we get 2 a year. I can't see that happening, but you know, you never know. But I would imagine they're going to move to no sale for a bit and then probably to 70 or 80%. It's what they normally do once they've done a substantial sale for a while. I think you've had plenty of opportunity. So if you need to load up, you're probably better to do it now than wait. Would be my advice. But you know, you can always wait and see if you're out of money, and obviously don't go spending money you don't have. Apex rules are stricter. They're actually not. They're actually not. Nothing's changed. They haven't changed anything. Everyone's making this huge fuss. They've not changed anything. All they've done is punished the traders, influencers, who are, you know, telling you that they're up millions or whatever it is. I didn't even see the post, but everyone going on about it. I really don't care about 18-year-old kids. Up all of this money when they're actually blowing through 30, 40, 50 accounts a day. They're basically passing 20 accounts, sending full send 20 accounts, failing. Passing 20, or they're passing 100 in one go. Trying 20, full send, fail. Try 20, full send, fail. Try 20, full send, fail. Try 20, full send, hit. And then they're way over the 30% rule, and they're just hoping that no one sees it. It's really not a difference. Well, look at this mouse. It's so annoying. All right, folks. I'd be very careful for the rest of the day here. Like, I'd still be leaning short on this. You can't reclaim value. The long trigger, I would not trade long on this, but the long trigger would be this, and you'd have to watch these nodes here. If you lift it up, you get really lucky. But I'd be looking for this rotation back down here. If it held 710s or held down here, then maybe that becomes more possible. I don't like this auction at the lows. I think it looks terrible, but hey, that's just me. And that's that. Alex, I'm rushing trying to pass as many Apex accounts as I can before the sale so I can reload. Is that a good idea? No. You don't need to rush the accounts. You don't need to rush the accounts. You need to get the accounts while they're on sale. You don't need to rush the accounts. You need to get the accounts while they're in sale and then try and pass them within 30 days. You do not need to rush that event. Do you have to pass the Apex eval before the close tomorrow? If you want the price of the activation fee, yes. But here's what I'd say. Don't rush it. I'm sure even if they do a 70% sale, you might find that activation fee for that is cheaper all the same. Just don't. It is not worth pushing too hard. It really is not worth pushing too hard. No, the PA fee will be whatever the new sale PA fee is. Account farming, is that what they call it? Account farming. 30% rule is only on the PAs, yes, correct. IB Muhammad is the first hour of trading, the high and low. So just like an opening range, but that's the high and low of the first hour of trading. Supum Toyd, will I look at a certain stock for you? Yeah, just type it in chat. I'll have a look. If you already typed it, I'm sorry. Might have missed it. Haven't traded in futures in a while. Do you think it's a good idea to get Apex at 90%? If you like their rules, yes. It's never going to be cheaper than that. Yeah, you can still pass in one day. There's always a promotion. It's just, it probably won't be 90%. It'll probably be 80% or 70% or something. Do I do straight to funded? No, I don't advise on straight to funded, guys. I think, I'm telling you now, there is no point in doing straight to funded. You have worse and worse rules if you go straight to funded and you pay more money. You're better off to, what does straight to funded cost? 300, 500, 600, 700? You're better off to open a small account and trade your own money than you are to do that. Just being honest with you. Being honest with you. Hims getting destroyed, mate. Hims is getting destroyed. They came out saying they weren't going to do that drug as well, didn't they? Gapping down on that. This is not looking good, mate. Actually, yeah, coffee would be good, please. I mean, it's such a big sale that they can't even work it out. Yeah, let's do it from there. Coming into the mid. All right, so if you start losing this node on Hims, you can already see it. This is your point of control right now on Hims. If you start rejecting 16s on Hims, you are going to come to 8s, right? This is like relative weakness. If the NQ goes in a big sale and the ES goes on a big sale, this will sell because you have relative weakness, all right? You are currently at fair value. Quite literally, you're at fair value, all right? So this is a big level under over, all right? If they bid and hold here, they can start to try and grind back, fill some of these imbalances and gaps. So there might be a trade here from like 16s to 25s if they hold it. But I'm telling you now, if they lose 16s, you're going to lose 50% and you're going to come to 8s. All right? That's Hims for you. Thoughts on XRP? I think it's pointless looking at any of these things, guys. Like, you're in a bear market. Why? Like, you're going to get murdered. Like, look, you're getting murdered. Don't even worry about it. Like, there's nothing to do on these XRP and stuff like that. Where's this? There's your wash. It's going to be the same story, guys. I'm telling you. From the breakout, let's do this. Can it work it out? No, too big for it. Let's have a look from there. Right, same node here. Here's your node on XRP. You're going to trade from 1.3 to, yeah, I mean, you're trading the 1.3s. You lose this. You lose this again. You're going to trade this node again. You lose this again. You're going to trade all the way down. Right, you can watch the $1, but actually there's not actually much volume there. Okay, you need to reclaim this. And look how many buyers are caught up here. All the buyers are caught at 2s. All right, so any return up there, that will be bag holder territory. They will probably sell that. And you've got to wait. You've got to wait for Bitcoin to get going, and you might be waiting a year. No, I'm not. I'm using my Flowzone cloud. It's my own system. It's my own system. Bradley, let me have a look. I had to post it to someone the other day. I don't use it anymore. I use a thing from Affordable Indicators. Give me a second. I'll try and find it for you, my friend. asked me for it last week. It might be gone, you know. Yeah, I only have it as a zip now. Are you in Discord, Bradley? If you're in yeah, affordable indicators does. Affordable indicators does. What's it called on affordable indicators? It's part of the. Sorry, mate, my brain is fried. Enhanced trader, chart trader. It has it in that same kind of thing. Yeah, Bitcoin dumping hard. Yeah, I mean, no surprise. Can easily move back to 30,000 if it needs to. You have chart trader. Is that the same thing? It should be on there. You might just need to turn it on. Can I look at weed? Yeah, is that the weed ETF? I mean, what do you want to look at? No volume, no one's trading it. There's nothing to do here. I mean, if you're in this, you're literally just hoping that you get a federal decision to make cannabis legal. That's all you're hoping for, which is what this was, talk of it from Trump. You get that, you're going to rip. But until then, it's bag holder central. Bag holder, bag holder, bag holder, bag holder. Dip bias bought in here. That's your pivot. You need to hold this level. Otherwise, you can see, like, this would be an anchored point of control, anchored VWAP. Dip buys bought, got ripped. Like, it's the same story. If you're playing stuff like weed, it needs to be like a long-term play and hold. Thank you. CVD is going up, NQ is going to pop. I mean, doesn't necessarily mean that. It could be divergent. So if you've got CVD going up and price not going up, it means there's passive sellers on the tape. It doesn't mean it has to pop. It means you've got aggressive buyers not getting anywhere. So what happens if we've got lots of aggressive buyers in here being held down by passive sellers? If they don't get that pop you are talking about, they are going to get absolutely wrecked. Because if this is mostly aggressive buy volume and passive sell volume, and the passive sellers wins, it's going to get wrecked. So don't necessarily think that it has to go higher. It's divergence. ASTS, sorry, did I miss that? ASTS. ASTS. Did they get news this morning or is it earnings? So you're trying to rally back after a gap. Fucking hell, that's a strong move.